Hello. 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 Hello.
Yes, Aditya.
Yeah. Good morning, sir. Good afternoon, sir.
Good afternoon.
Hello. Hello. Hello.
Aditya, we can hear you. Please go ahead. Tell us.
Yes, sir. Sir, actually, I had given one interview in the investment banking for the investment banking profile. So they have asked me some questions. So can I discuss with you in the class itself?
Hello, Aditya. This is Sumit. Yeah, I can hear
Yeah.
you. So in the class, you send me an email for all those questions because it will confuse.
Actually, no, it is not. It is about the investment banking profile and it is related to the cash flow mainly. So if you are teaching cash flow, it will be helpful for other students as well.
Once I complete this, you can ask Aditya, okay? Once
Sure,
I
okay.
complete this cash flow statement, everything, because right now it will really confuse. Understand my request, okay?
Sure, okay.
Okay.
So Sumit, I have made a request to all the people in this, in this batch that we try and make ourselves available by at the right time. Like by 12:05, we should ideally be starting with our session. So I made a request to all the students to be available on time from the next class onwards. Okay, that way we keep our timelines intact.
Cool, guys. Let's start. We have waited for 5 minutes and almost 47 people have joined, including 46 unique people have joined, I guess. Including 48 is including me and the coordinator, who is none other than Shashank. So I'm just putting my headphone. Okay. So just confirm if I'm audible. Hello, guys, can you hear me?
No, Sumit, your voice is low.
So it will adjust.
Voice is very low, Sumit.
Your voice is very low, Sumit. Is it better now, Sachin?
No, sir, no.
Just give it a second. Is it better now?
No, Sumit.
Very low, Sumit. Okay. All right. P, how is it now?
It is fine, sir.
Yeah,
Fine?
it's fine.
Cool. Let's start, guys, from where we stopped yesterday. I'll just give a brief also. We were doing what, Sachin, yesterday? We were building income statement, balance sheet, and cash flow statement, right? Yes. Cool. Awesome. How are you guys doing? Great this morning. Let's learn. Not this afternoon. Okay. So let's learn quickly.
Sir, it's a request. Just can you just brief us about the yesterday's class because I was not present.
Aditya, please check the video. Honestly, I cannot really do that.
I think
what I'll do is
Aditya,
what you think is really, I respect to that. But what I'll do is I'll give a gist anyways.
ask
for it or not.
But
The gist is for the people who attended the session. For you, it might not be that okay, but for you, you already have a background of finance. So I guess you would be able to cope up with that.
Yeah.
Okay.
So is the class like uploaded on the video? The video class has been uploaded on the channel.
Aditya, I have already answered that question. Okay, it is something that is under consideration. You have communicated to us. I'll forward it to the management and get a response on that. Okay.
Okay. Okay.
Otherwise, also there's a time, right? It gets uploaded on cloud, so it takes at least 24 to 72 hours, right? Am I true? Am I correct here? For the video to get in your inbox.
Yeah, sir. I mean, it takes not that much amount of time, but it is a time taking process.
वो क्योंकि
To
क्लाइड में
to
अपलोड
fetch
होता
all
है
the details.
on your private channel, it has to come. Okay, chalo. So anyways, Aditya, you would not feel left out because you
No,
have
sir.
understanding of it already. So
Yes,
honestly,
sir.
if this is something which I know that you don't know, I would have really taken more time for it. It is
Sure,
very
okay.
basic for you. I
Okay,
know
sir.
your profile very well.
Okay. sir.
Yeah, I'm sure I've seen your work also. I'm really impressed by that report which you shared. I
Which
forgot to
report?
message because I was seeing it on Thursday.
The report which I have sent to you.
Yeah, the report which you have sent to me, and in fact, the one-page report which you have made, that is also very good.
Thank
So
you.
I
Sir.
was going through it. That report which you had sent me a month back,
Yeah.
not
yeah.
a month back, 20 days back, right? I was really impressed with that work. The kind of research work you have done.
I understood.
Right. So please, I know you would understand. Okay, so guys, let's start. Income statement, balance sheet, and cash flow statement is something which we were trying to build, guys, yesterday. We had almost built it, and then the bell of 4 o'clock went off, and then we had to stop the session. Okay, so let's understand quickly what we had done so far. So what we have done is we have built out all the line items which our tea business could have possibly, and we have understood that each of the line items can either be an asset or a liability, or it can just be a income statement item which is the form of revenue or expenses. But any of the income statement item in the form of revenue and expense can turn itself into a liability or an asset, largely into current liability or current asset, right? Largely in current asset, the names would be like debtors, trade receivables, inventory, prepaid expenses. When they turn into the form of current liabilities, largely the name will be in the name of creditors or outstanding expense, right? Outstanding expense or creditors or trade payables, something like that, right? Fixed assets which we buy doesn't come into income statement, right? It doesn't come into income statement. It directly goes where? Chandni. Fixed asset which we buy directly goes where, Chandni? It goes to
Yes, balance sheet.
balance sheet directly, right? Now, then there is an expense called depreciation. On what do we charge depreciation, guys? We charge depreciation on fixed assets, right?
Fixed
Now,
assets.
assets also we learned yesterday. Assets can be tangible assets as well as intangible assets, right? We learned, right? So, intangible assets are something which you can touch, see, feel. No, touch, see, and something. And intangible asset is something which can be felt but which cannot be touched and seen. And we took an example of goodwill, right? Like goodwill, there can be other intangible assets like patents, trademarks, something like that, right? So these are variety of assets. Similarly, we looked at liabilities. Liabilities can be long-term liabilities in the form of loan which we take from bank, or it can be in the form of debentures also, right, Fiza? A company can issue debentures also. That's also long-term liability, yes or no?
Yes, sir.
Similarly,
Yes,
there
sir.
can be short-term loan, Fiza, in the form of what?
Yes.
In the form of working capital loan which it takes for bank, or the installment which needs to be paid. The long-term loan needs to be paid in 5 installment in 5 years. Then the first year's installment would be considered as a short-term loan, right?
Yes,
Because
sir.
that is due within
Correct.
the 365 days only and would be
Yes,
reported
sir.
under current liabilities.
Current liabilities.
Correct. So these are something which we talked about, and then we said that something which cannot be named but we know it is a current asset only can go under other current assets, and same can go for other operating expenses, same can go for other current liabilities. We learned what is operating expenses and what are non-operating expenses, right, Sachin? We learned what is operating expenses and what are non-operating expenses.
Yes.
And I also talked about the cash which is lying idle with the companies generally gets invested into investment. The investment can be long-term or short-term. If it is short-term, it comes under where? Current assets. If it is long-term investment they are investing into, it will go for long-term assets or non-current assets. Like Lord Krishna has different names. Similarly, assets have different names, right? So something like this we had talked about yesterday. And then, and then we had started building the income statement, balance sheet, and cash flow statement, right? And while building income statement, we first build revenue. We said everything is clearly written over here that revenue is 18,000 per day, and 50% of the customers are competitive and they pay with a delay of 60 days. So we know that at the end of the year, 2 months of revenue will be your receivables. But for the year, Kailash, for the year, we will book the full 12 months revenue, right? What is the concept behind that? The concept of matching principle, right? Yes or no? Guys, are we joined by Mr. Kailash or not? Or Kailash hasn't joined yet? Okay, it seems Kailash hasn't joined. He is on the way, maybe. Okay, it's okay. But we have been joined by Kala today. Kala, yesterday I called your name. You didn't respond. Today you're there, right? Kala, you're there, right? Kala? Okay. Today itself seems she isn't there. Okay. Maitri, you are there. Maitri was responding even today. Acha, Nikhil, sir.
Yes.
Nikhil, you weren't
I'm
there
there.
yesterday. Yeah, Nikhil, how come you weren't there yesterday, man? I was missing you. Was it working for you?
No, I had a family function, so I had to.
The
go
family
there.
commitments you cannot ignore, huh?
Yes, yes,
Yeah,
yes.
so cool, man, cool. I was missing actually. I was taking your name 2-3 times. I took your name and then I realized you weren't there in the session.
Right, right. I also missed the class, but anyway, I'll go and watch.
Yeah, if you ever feel
video.
like asking questions, do feel free to asking questions after going through the class, definitely.
Thank
Yes.
you, thank you.
Tejaswani, we have Tejaswani. You have been joined by Tejaswani. We have the fortune of having Satya in the session. Sakshi is also there. Richa has joined. Siva Kumar has joined. Prashant has joined. Cool, awesome. So yes, a lot of people have joined. Maitri has joined. Yes. Still, Kailash is missing. So, Sachin, can you do a simple favor on your WhatsApp message? Can you send a message to Kailash? Please join. Because I really want people who regularly attend the session should be there in the session.
Yes,
Yeah, thank you. That's so great. And Mr. Baka, did you get my file? Hello, I sent the file to you and Tejaswini both. Have you guys got my file?
Yes, we have.
Right.
I got.
Yes,
Cool.
I have received it.
Cool, awesome. Yeah. So we talked about revenue yesterday. Similarly, we built sugar, milk, gas, grocery, and other grocery. What are these? These are cost of goods sold. Why, Tejaswini? Why we categorize them as cost of goods sold? Why did we
Because they
categorize
are directly related to the sales.
They're directly
and
related,
direct
they go
costs.
into the product itself, right? They go into the product
Yeah.
itself in order to, if you have diabetes, God's grace, you never get diabetes as a disease. But in case if somebody has a diabetes and he's being served a tea without sugar, it's fine. In that case, sugar is not a cost of goods sold, right? But in that particular tea's case, but generally, if you will serve a tea without sugar, next time, do you think customer will come to your place? Hello?
No.
No, right? Or if you will serve tea without milk in it, do you think customer will come into your place? Hello?
No, sir.
No, right? Because they go inside the tea, in order to make tea a fantastic experience, you have to mix tea with sugar, milk, cardamom, grocery items, and other grocery items, and gas. Though fizza, we do not put gas inside the tea. Okay, it would be very funny then, right? And people would die also out of this fun. If you will
Right.
put gas inside the tea and you will serve them. No, so this is not possible. But still, in the process of making tea, gas is a primary ingredient, though it doesn't go inside the tea, but it is required to make the tea, right? You cannot make a tea without gas. Honestly, you can say I have electric items for that, but still, though their gas is getting replaced by electricity, but still that needs to be there. Some power needs to be there for really make it, you really cook a tea. So that these are the things which go inside the tea, right?
Right, sir.
And then we realize what are operating expenses. Largely, what are the operating expenses, Siddhartha? What is marketing and sales? Another one is
advertisement, rent,
advertising, research and development,
research and
general and
development.
administrative expenses, right?
Yes.
These are all operating expenses. We categorize Chotu's salary as an operating expense, which
Yes, sir.
categorize rent of the place as an operating expense. We categorize
Yes.
marketing expense as a operating expense.
Expenses.
And each of these line items has its own unique fashion of condition. So for example, revenue had a condition that 2 months of revenue will come in arrear, in the sense you will receive in the next year. So we
Next financial year.
categorize that 2 months of revenue as what? Non-current assets or current assets? Current assets in the form of what? Debtors. In the form of what?
Letters.
Debtors. Similarly, some of the items which we are buying, some of this cost of goods sold, every item has a different perspective. For some items there is a 1 month of time period which we are getting in credit for credit period. For some items we are getting 15 days of credit period, and so for some items we are getting 2 months of credit period. Accordingly, we have created something called as creditors. Hello, creditors, yes or no?
Yes.
Under current liabilities. Similarly, to some expenses we are paying in advance, and to some expenses we are paying in delay of 10 days. So which expense we are paying with the delay of 10 days? Salary. Salary we are paying to Chotu after delay of 10 months. So that means 1 month, that is last month of salary, will be
Outstanding.
considered an outstanding salary. And the expenses which we are paying in advance, Amutha, the expenses which we are paying in advance are the expenses, hello Amutha, which would be categorized as what? Prepaid asset. Prepaid expenses, correct? And it would come under current assets, right? As prepaid expenses, right?
Yes.
And then the cash flow statement, the magical cash flow statement. The very objective of coming up with cash flow statement is what? You want to retreat the profit. You want to retreat the profit. Consider profit as nothing but a, consider profit but nothing as an orange. Hello? Consider profit nothing but as an orange. Have you seen an orange? Have you eaten an orange?
Yes. Yes.
Right? Let's look at the image of orange. Memory will get refreshed. Orange, right?
Yes.
This is an orange, right? Aditya, this is
Yes,
an
sir.
orange. Hello? Right? This is an orange.
Yes,
Consider
sir.
profit as an orange. And cash flow statement is a tool, is a machine, a mixer, right? A mixer grinder. So what is cash flow statement we made for? We need to come out with an ultimate answer of cash. So what we do,
Basically, it
on
is
the
an
top,
inflow.
hello Aditya, on the top we put what? On the top we put orange, and on the bottom we get what? On the bottom we get what? Juice.
Juice.
And the entire thing is machine. So on the top here we will put profit. The ultimate outcome will be what? Cash.
Cash.
So we are saying that it's
basically
the profit. It's a profit, Aditya, which we are
Yes,
trying
sir.
to mix with some grinder, mixer, and then ultimately what will come out of here? What will
Juice.
come out of here? The cash, the juice. So
Orange juice.
in order to convert the profit, which may be cash profit or which may not be cash profit, why a profit might not be cash profit? Because our income statement is built on what principle of accounting? Income
accrual
statement.
basis. Accrual basis.
Yeah, Mr. Mutha, income statement is made on which concept of accounting? Accrual concept of accounting, right?
Sir, but hello.
Yes, Aditya.
Sir, but in cash flow generally we take only the cash, the transactions which impacts the cash now.
That's all. That's what we do, right? We'll adjust the profit by the the transaction. So don't worry, just listen
Basically,
to me. Okay?
that is a non-cash transaction, no?
So don't confuse everyone, Aditya. Just listen to here, okay? If you have any doubt, you ask, okay? So net profit, guys. So it's the net profit which will take Mr. Mutha from the income statement, and we will do some adjustments. We will do some, Mr. Mutha, we will do what?
Yes, sir,
Some
bolo.
adjustments.
Okay,
Right?
okay. Yes.
We'll do some adjustments, and after doing that adjustment, what we will reach to arrive at? Cash. Cash item.
Yes, sir.
So we know that with respect to that, let's understand one example. What adjustment do we do? We know that income statement may the revenue which we have recognized. The revenue which we have recognized. The revenue which we have recognized is not cash, total cash revenue. Why? 2 months of this revenue is a part of what? It's part of receivables which I am not going to receive right away. 2 months of this revenue is a part of receivables which I'm not going to receive right away. It will come in the next year in the form of cash, right? But still, I have recorded them as what? I have recorded Anand. I have recorded that as what? Revenue. Hello, Anand. I have recorded, even knowingly that this is not coming in the form of cash, I am recording this as what? Revenue. This is resulting into what? This is resulting into increase in net profit. Yes or no?
Sir.
But is my cash profit increasing? Hello? Is my cash profit increasing? Is my cash profit increasing? My cash increasing? Hello?
No.
Yes or no? No. So I need to readjust my profit to reach to cash. So what I'll do, it's a very simple principle. If there is an increase in current asset, if there is an increase in current asset, for example, with the increase in debtors, the current assets are increasing, right? With the increase in current asset, what will increase? Profit will increase. Now, if I want to deduce the juice, if I want to deduce the cash out of it, what I have to do? I have to readjust this by I have to readjust this by
decrease
reducing
in
that
current
amount of debtors from profit. Then I will reach to what? Cash. Yes or no?
Yes, sir.
So any increase in current asset, what is the rule we made?
Profit will
Any increase in current asset, what will increase? Profit will increase.
profit will increase.
But in order to reach from profit to cash, what we have to do? We have to
Add-
reduce the
add the
portion of increase in
portion.
current asset.
Yeah.
Right? That portion of the current assets which we have increased. What portion of current assets we have increased over here? We have increased the portion of debtors from what? From 0 to 531,000, right? So that increased portion, how much is the increased portion? 531,000 is the increased portion. This increased portion needs to be reduced. Hello, Anand? This increased portion needs to be reduced from what? It needs to be reduced from
Previous.
profit, right? It needs to be reduced from profit. So we will reduce it. Similarly, against current liability, let's take an example of current liability. If we pay something in advance, so for example, we paid something in advance. If we paid for gas, we paid in advance. Yes or no? Hello?
Yes, sir.
For gas, we paid in advance. Hello? 1 month in advance. Hello?
Yes, sir.
Right? Gas, 1 month prepaid 1 month in advance, right? So
Yes, sir.
in the month, rather than paying for 12 months, for how many months have we paid? We have paid for
13 months.
13 months. 13 months. So my profit would go down. Hello?
Yes.
Yes or no?
Yes, sir.
My profit would go down. Hello? My profit
sir.
will go down. If my current liability will increase, what will increase?
Current liability will increase.
So would it result into current liability? Hello? If I'm paying in advance, would it result into current liability? Anand, don't say yes in any of the statement just because I'm making some statement. Hello? If I'm paying in advance,
Profit
will it result into current liability? Hello? If I'm paying in
No,
advance,
it's a current asset.
no, it's a
Current
current asset.
asset.
Anand, think, apply your brain also. Don't say because I will put you in a trap. Hello?
Okay.
I will put you in trap. See, have you seen this photo ever? Have you seen this in photo? Have you seen this photo, Anand? Have you seen this photo? Hello, Anand?
Yeah. No, sir.
If you will say yes in everything of mine, what I'll do with you? I will put you in trap.
Yeah.
So don't say yes without applying your brain. Hello?
Yeah, okay.
Don't say yes to without applying your brain. Otherwise, you will be in a trap. So again, I'm repeating. What will happen if my gas I'm prepaying? Hello, Anand, think about it.
Yes, sir.
If I'm prepaying, what it result into? For 12 months of gas, I have paid how many months of gas? 13 months.
13 months.
13 months. What would it result
Yeah.
into? What would it result into? Increase in current liability or current asset? Hello?
Current asset
Current
increase, sir.
assets.
Current
Profit will-
assets. It would
profit
result
will
into
increase.
increase in current
Current
assets.
assets.
So if it results into increase in current assets, how do we treat it? How did we treat it? We subtract it. Hello?
Yes, sir.
Yes or no? To reach to cash. Why? Because if there is increase in current asset, that means profit will increase. If profit will increase, that means we'll need to reduce that increased portion of
Profit.
current assets. Hello? Yes or no?
Sir. Yes, sir. Current asset.
To reach to cash.
Reach to profit. Cash.
To reach to cash profit or cash.
Yeah.
Only the cash, not cash profit, but the cash amount. Right. So in what cases current liabilities will be created? Not in case of gas, but in case of sugar. In case of Anand, in case of what? Sugar. Why? Because I'm using 12 months of sugar, but I'm paying for how many months of sugar in a year? I'm paying. What is the condition for sugar? Look at it. What is the condition for sugar?
60
Hello?
days. 60 days period.
50 days,
2
60
months.
days of credit period. So 2 months.
2
That
months,
means I'm using 12 months of sugar, but I'm paying only in that year only how many months of sugar?
10
months of
10
sugar.
months.
That means next 2 months of sugar will be paid in the next year.
Next
That means I have
quarter, yeah.
used the sugar, but I haven't paid. So it's an outstanding expense. But here we will call it what? Creditors. Why we will call it creditors, Anand? Why do we call it creditors
It's
and not outstanding expense? Because this is a direct cost.
trade.
Right? This is a trade related item. We need to keep buying from the same people. So we get trade payables.
Yeah.
Right? And now this would result into what? Increase in current liability. Increase in
Current liability.
current liability in the form of what? Creditors. But at the same time, will it result into increase in profit or decrease in profit? Hello,
decrease
Anand?
in profit.
Decrease in profit. Why? Because here we are charging as an expense for 12 months, though we have
Yeah.
paid only for 10 months. So we have decreased the profit with the increase in current liability. To readjust it and reach to the cash, what I have to do?
Cash profit.
I have to add it back
add
to
the portion
profit.
increasing correctly.
That increased portion of current liability needs to be added back to profit, so that we reach to what? Cash.
Cash.
Guys, any confusion to so far? Whatever we discussed, any confusion on that concept? Anyone? No. Okay. So far we had done till yesterday, guys. Now let's come to very important aspects of depreciation. Hello? What?
Sumit, is the term trade payable and account payable same thing?
Yeah, they are like Lord Krishna.
Okay.
Like Girdhar Gopal and Krishna Bhagwan are same. Similarly, trade payables and account payables are same, Sachin. Okay. All right. So now let's try and understand the concept of depreciation, guys. Yours is 35, right? So what is the difference between depreciation and amortization? We discussed this yesterday. Yes. Hello.
Yes. Depreciation
Tangible
on
and intangible.
tangible assets.
Tangible
amortization
asset.
intangible.
Correct. So depreciation, right? So where do we charge depreciation? We charge depreciation on fixed asset, on fixed assets, right? Why do we charge depreciation on fixed asset? Because fixed asset gets used and it has useful life, right? For example, if you have a stove, or if you have a machine, if you have what? Machine. So every machine can have a useful life. Hello?
Yes.
Yes.
Can have a useful life,
Yes. Sir.
right? So we need to charge depreciation based on how much have we used. So if you have used 20% of the machine, so 20% of the machine needs to be depreciated. Yes or no?
Yes.
Right? And that depreciation goes as an expense where? That depreciation goes an expense where? Income statement. That depreciation goes as an expense where?
Income statement.
Income statement. That depreciation goes an expense where, Maitri? That depreciation goes an expense where, Maitri?
Income statement.
Income statement, right? Now somebody yesterday asked what is straight line method and all. So guys, depreciation can be calculated based on two methods. How many methods?
Two methods.
One is straight line method and another one is WDV method. What method? WDV method. So that is written down value method. And this written down value method is also known as reducing balance method. Reducing balance method. Is it clear? How many methods are there to calculate depreciation? Hello?
Two methods.
What are the two methods?
Straight line method
Straight line
and
and
written down.
WBD.
Straight line method and WDV method. And WDV method is also known as what?
Reducing balance method.
Reducing balance method, right? Now, each one has a different way of calculating the depreciation. First, let's talk about straight line method. What happens in a straight line method is you decide that the absolute value of depreciation expense will be same. Hello? What is the method? The absolute value of depreciation expense. Absolute value of depreciation expense will remain same. Hello? What is the straight line method? For example, you bought a machinery of 100. It has a useful life of 10 years. So every year, how much will you charge as depreciation? 10 rupees? Yes or no? Hello?
Yes. Yes.
So What is the method of a straight? So is this a straight line method? Yes. Why? Because you are charging 10 rupees as a depreciation expense every year. So your absolute value of depreciation, is it changing?
No.
Is it
No.
changing? Nikhil Kumar, is it
No.
changing? If you are charging 10 rupees of depreciation for the next 10 years, is your value changing? Absolute amount of depreciation changing? No. Right? Mr. Barker? Yes or no?
Yeah. Yes.
No, no, right? So because your absolute value is not changing, it is called as what? Straight line method of depreciation. Hello? What is it called as? Straight line method of calculation. Now, for example, you also know that I am buying this machinery for 100 rupees. It has a useful life of 10 years. And in the end, means after its useful life, this machinery can be sold at 5 rupees. The machinery can be sold at a what price? 5 rupees.
5 rupees.
So again, let's put me the condition in a more understandable manner. What is the purchase price of the machinery? Hello?
100 rupees.
And what is the useful life?
10 years.
And what is the salvage value or scrap value? Salvage
5
value or
5.
scrap value. That means even after using Ramakrishna, even after using the entire machinery, you would be able to sell this machinery Ramakrishna at what price? 5 rupees.
5
So
rupees.
scrap. So you joined just now Ramakrishna, or you were there since the start of the session?
From the start of the session.
So as you had requested, I just gave a gist of what we discussed yesterday, right?
Yes.
You only had requested, right?
No, not me. It was not me.
So somebody in the end had requested that whenever you start next tomorrow, that just give a gist of what we have done, right?
Yes.
I don't know who was it, but somebody had. I thought it's you.
I had asked, sir.
No, you weren't there, Aditya, yaar, yesterday. What are you
Okay,
saying?
okay.
You don't jump in every train. Okay. So I'm talking about yesterday. All right. Is it clear, guys? These three
Yes.
things. Now, tell me, how much is the depreciation will you charge every year? Would it still be 10 rupees? Tell me. Because if you charge 10 rupees every year, at the end of the year, machinery will be depreciated by what rupees? 100 rupees. Do we need to depreciate this machinery for 100 rupees? Hello? Do we need to depreciate the entire 100 rupees? Hello? Or would the
No,
entire 100 rupees be depreciated? No.
95.
Only the
95.
95 we need to depreciate by, because we know that after the end of the life, we would be still able to collect how much from the market? 5 rupees from the
5
market.
rupees. 5 rupees.
So because this 5 rupees is the scrap value, the amount to be depreciated is how much? 10 minus 5. Hello? The amount needs to be depreciated is how much? 10 minus 5 in how many years? 10 years. So the amount
10
needs to be depreciated divided by the tenure or the useful life of the asset will give you the amount of depreciation needs to be charged every year. Needs to be charged every year. So what is straight line method? Straight line method is a method of depreciation in which the amount which needs to be charged every year is same for all the years till the end of the life of the machinery. Yes or no?
Yes.
Now, if somebody says you that the straight line, you need to charge depreciation at SLM method. What method? SLM method. And they do not give you useful life, but they tell you the rate of depreciation should be 10%. The rate of depreciation should be how much?
10%.
10%. Then how will we calculate depreciation? Again, same thing. What is the purchase price of machinery? Hello? What is the purchase price of machinery?
100.
100. And what is something which you can get after 5 years, 10 years? 5 rupees. So what needs to be depreciated in total? 95 rupees. Right? And what is the 10% of 95?
9.5.
9.5. Is it clear? So even if you are given percentage, you can calculate the amount without having useful life in place. Hello?
Yes, sir.
Yes or no?
Yes.
Right. Now, the problem over here can come from what perspective? The way we report assets, hello? The way we report asset has a concept of gross block and net block. The way we report asset has a concept of what? Gross block and net block. What is the difference? Gross block is the historical cost of all the machineries which are under this block? Hello? Gross block of the machinery is what? Historical cost of all the sum total of historical cost of all the machineries which are under a block. Okay. So how many machineries are there we have bought? Only one. So in this block, how many machinery can be there? Only one.
Only one.
Right? What is the value historical cost? 100. Hello? What is the historical cost?
100.
100. What is net block? Net block is nothing but gross block minus depreciation. Hello? Net block is nothing but gross block minus accumulated depreciation. Hello? What is net block? Net block, hello? What is net block?
Gross block
Depreciation.
Net
minus-
block is
Gross
gross
block.
block
Minus
minus
Depreciation.
accumulated
Depreciation.
depreciation. Hello? Accumulated depreciation. And what is accumulated depreciation?
Of all the depreciation.
Cumulative depreciation. Hello? Cumulative depreciation. So if I tell you I earn 10 rupees every year. Hello? If I tell you I earn 10 rupees every year. So there the 5 years I worked, I earn 10 rupees every year. So what is my annual income? What is my annual income?
10 rupees. 50.
10 rupees only, right?
Yeah.
Every month, every year. Every year, my annual income is 10 rupees. But what is my accumulated dhan rashi? Accumulated
50.
wealth?
50 rupees.
It would be different every
50
year.
rupees.
No, it would be different every year. Hello, who is saying 50 rupees? This is wrong. Did I say what is my accumulated wealth at the end of 5th year? Hello, did I ask that? No, I said what is my accumulated wealth? The answer is accumulated wealth is different every year. In which year are you looking at? If you are looking in the first year, my accumulated wealth is how much? 10. If you are looking in my second year, my accumulated wealth is
20.
last year's 10
20.
plus this year's 10. If you are looking at the third year, what will be my accumulated wealth? Up to last year, whatever is it is. It is not only the last year's wealth. It is not the 10 which you earned in the last year. No. Whatever was accumulated till last year plus this year's new. Right. So this way I would reach to value of 50 by the end of 5th year. Hello. Yes or no? Hello.
Yes.
So similarly, if there can be an annual depreciation and there can be an accumulated depreciation. Yes or no? Hello.
Yes.
There can be an accumulated depreciation and there can be an annual depreciation. In income statement, which depreciation should go? Tell me.
Annual depreciation.
The actual
Annual
depreciation of that month.
That year. Hello. That year, or if you are creating monthly statement, so that month. Okay. So annual depreciation should go to income statement. Why? Because income statement is made for just one accounting period. Hello.
Yes.
Income statement is made only for one accounting period. Is it clear? Anybody has any question? So how would I do the accounting of it? Look at it. This machinery is there for 5 years, right? 10 years, right? What would be my gross block? Hello. What would be my gross block?
100.
100 for all the 10 years, right?
Yeah.
Mm-hmm. 100 for all the 10 years, right? Now I would start charging depreciation. Hello. I would start charging depreciation. Yearly depreciation. So what would be my first year's depreciation?
9.5.
Think about it.
90.
9.5, right? How 9.5?
Yeah.
Even
No,
if I'm
then-
given rate of depreciation, 10% is the rate of depreciation. 5 rupees is the scrap value, right? So what is going to be my annual depreciation? 9.5, right? Hello. How would I calculate that? Is equal to 100. That is equal to 100 minus net scrap value divided by
Useful.
or multiply by 10% rate if rate of depreciation is given. Multiply by 10%, right? 9.5. Hello.
Yes.
What would be my net block? 100 minus 9.5. What would be considered as total asset for that year at the year end
90.
in the balance sheet?
90.5.
Yes.
90.5.
90.5. The asset needs to be considered in the annual report is what? 90.5. So somebody yesterday said that we present accumulated depreciation. I said it is just only for the presentation purpose we present. Ultimately, in the total asset, which value gets added? 90.5.
90.5.
Okay. Now, what would be the accumulated depreciation next year? Equal to last year's depreciation plus, again,
Yes.
what? How would I calculate this year's depreciation? Hello?
Same 100 minus.
100
minus
or
5.
90.5. Hello? 100 or 90.5?
100.
3.5.
100 or 95. Think about it.
If it's straight line, then 100, and if it's reducing, then 90.5.
If I will consider 90.5, what will happen, guys?
Depreciation amount will reduce.
Depreciation. And what is the condition of a straight line method? Your amount of depreciation should remain, absolute amount should remain same. So it would only remain same if my base on which I'm calculating depreciation is same. So even if percentages is given in SLM and you are given gross block, do not get ever confused. Do not start calculating 10% of net block. No. It will always be 10% of gross block minus scrap value only. It will always be 10% of what? Gross block minus scrap value. Scrap value is how much? 5% into
10%.
depreciation percentage. Right? What is this year's depreciation? This year's depreciation is
19 minus 9.5.
9.5 only. Right? Hello? Any confusion on this? And what would be my gross net block value? Gross block minus accumulated depreciation. Any confusion on this? Hello?
Sumit, just could you repeat this transaction?
So let's do it for third year, na? Let's do it for third year.
Correct.
For third year,
Yes,
what would be the depreciation? For third year, depreciation will be again 100
9.5.
minus 100 minus 5, right?
5.
100 minus 5
Correct.
into 10%.
10%.
Into 10%. 9.5.
Right? Again, why? Because 100. Why are we considering 100 and why not 81? Because 100 is the
Straight line method.
it
Absolute
is a
value.
straight line method, and we have to calculate it on a gross block. If it is a straight line method and if we are given percentage, then we have to calculate it on always on gross block only. Gross block minus scrap value. So this is annual depreciation. And what would be accumulated depreciation? 19 plus the annual depreciation. Hello? What would be accumulated depreciation? Last year's depreciation up to last year. It is not last year depreciation. Hello? Last year individual year's
Correct,
depreciation is 9.5 only. This is accumulated depreciation, which is last year plus last year. Right? Or this would have been calculated like this also, equal to whatever accumulated depreciation till last year plus this year's depreciation. This year's depreciation we know how to calculate. 100, which is the gross block, minus 5 multiply by 10%. Right? So what would be my net block? Gross block minus this. Is it clear?
Sir.
Any confusion?
No.
Anyone? Has anyone has any confusion? Tell me. So if no confusion, we can just copy paste this till the end. And what would be the net block at the end of the 10th year? Hello? What would be the net block at the end of
Same as scrap page value.
scrap value? Why? Because this is something which we haven't depreciated, so we will be left with this value only. Right? What would be the gross block even in the 10th year?
100.
But what would go into balance sheet as total asset?
5.
Reporting will be happening at 5 only. Any confusion on straight line method? Tell me. Anyone? So this is what straight line method is. Now, what is WDV method? WDV method is, first of all, WDV method you will not consider, you will not give any relevance to scrap value. Hello? In WDV method, you will not give any relevance to scrap value. Okay? Whenever it has to sell, it has to be sold, it will get sold. And that time we will discuss what is the book value it left with and at what price it is sold. And accordingly, we will book the profit or loss on sale of assets. But right now, how to calculate do the calculation in written down value method. So first let's understand what written down value method is all about.
So Sumit, we will use the net block as the asset value in the balance sheet and the depreciation amount in the income statement, right?
So it will not be accumulated depreciation which will go in income statement. Hello?
Not
What will go in income
accumulated,
statement?
but the actual depreciation
Correct.
amount, 9.5.
Correct. Which, for example, it's calculated over here. So it will remain 9.5 every year, right?
Okay.
Okay. Let's go and written down values. So statement method is clear, right? Let's talk about written down value method. In written down value method, rate of depreciation, that is percentage of depreciation, will be fixed, but the depreciation will get charged to
Net block.
net value of the asset and not the gross value of the asset. Not the gross value of the asset. So in WDV method, we will charge depreciation not on gross block but on net block. So in first year depreciation will be charged on gross block only because the gross block itself is the net block. So first year's depreciation will be what? And second, you will not consider anything as a scrap value. So if your rate of depreciation is what? In the same example, if you have to calculate a net written down value method, if the rate of depreciation is 10% and you bought the machinery for 100 rupees, then it will be depreciation will be what? First year's depreciation will be what? Net block, which is gross block only, into 10%. First year depreciation will be what? 10 rupees. Hello? What would be the first year's depreciation? 10 rupees.
10 rupees.
Second year accumulated depreciation will be what? Last year depreciation plus net block. Hello? Net block into 10%.
Sorry, Sumit, did you say that we are not taking the salvage value for?
Yeah, we're not taking the
this-
salvage value for WDV method.
Okay.
Okay. There's no point taking salvage value because in WDV method, the value of asset never reaches to 0. The value of the asset never reaches to 0 in WDV method, right, Tejasvi? You will see it here. So,
Okay.
so what is the second year's depreciation, guys? Second year's depreciation is the net block into rate of depreciation. Simple. Third year depreciation will be what? Calculate the net block. That is last 2 years depreciation and gross block. Gross block minus last year 2 depreciation is net block 81. So what would be third year's depreciation? Hello? Net block of last year into
10%.
into 10%. Right? So, or what would be accumulated depreciation? Accumulated depreciation will be depreciation till last year plus this year's depreciation, right? Hello?
Yes.
Right? Now, what would be the fourth year's depreciation? It will be again net block of third year into 10%. Hello? 10%. And what will be accumulated depreciation? Depreciation charged till last year plus this. Is it clear? Tell me. Hello? Is it clear?
Yes, sir.
Yes, Sumit.
So this way, you will notice that the value of asset will never reach to 0. For how many years you create, it doesn't matter. Even for 43 years, what is the value of net block of value? 1 rupees. It will never reach to 0. Why? Because it is always 10% of net block, right? Which is changing, which keeps on changing. Hello? The net block value keeps on changing, yes or no?
Yes, Sumit.
Right.
The gross block, sorry, 10 years, for example, at the 10 year of, even after the 10 year, the depreciation getting charged is only 65. Accumulated depreciation getting charged is 65 only. It's not 95 or 100 rupees. So, does the age of the asset really matter when you are charging WDV method? Think about it.
No.
Doesn't matter. So, what kind of assets do you think would be charged under WDV? What are the assets where age really doesn't matter?
The land.
Intangible
I
asset.
try to understand again and again. I told you land is something which is never getting depreciated. It doesn't loses the value. Yes, it has indefinite life, but does it lose the value during the indefinite life? Hello?
Any building that is constructed.
Building. So you know the LIC's building in Mumbai, how old it is?
Right.
But building have a life.
Yes, it has a life. It is a very long life, Siddhartha.
But goodwill and trademark have there's no.
I haven't talked about anything about intangible life. Hello? Have I commented anything on intangible assets so far?
No.
So please hold.
Okay.
Anybody has any idea how old is this building? This is Elphinstone building in Bombay. When was it built? Hello?
1870.
1870. 1870. How old? Hello?
151 years.
How old is Connaught Place of Delhi? Hello? Connaught Place. What is the definition of Connaught Place? Hello?
151 years.
Okay. Built year. Hello? Connaught Place, Delhi was built in which year? 1930. When was it built? Hello?
I think you can
1930.
take the Red Fort also. Red Fort, I think, is older than anything else.
Yeah.
There.
So there are, obviously correct.
Fort,
In
Taj
fact,
Mahal.
many of our houses, grandparents' houses would be there, which is there since 1930s and 40s, and many of us can have that kind of story also, right? I personally have. So my grandparents' house in my hometown in Sojo City is somewhere around 100 years old. Does the construction lose its value? Yes, obviously. A newly built house will have obviously a higher value than an old built house. Yes or no?
Yes.
I agree. Does construction lose value? Yes. But does the value become zero? Hello? Does the value become zero?
No.
No, right? Still Connaught Place is highly valuable. See, it's the most expensive place, not only in Delhi, but throughout the country. Hello? The shops of Connaught Place is expensive not only in Delhi, but all throughout the country. The rentals of Connaught Place area is the highest in the country. Hello? Yes or no? Even the building is so old. Even the building is so old. And so is with the Mumbai, right? Hello? Fort area, Mumbai. Do you think rentals are cheap? Have you ever visited, guys? Many of you would have visited Fort area at Mumbai. So, we need to understand there are certain category of assets which would not get out of use so easily. Even they would lose the value. So, what kind of depreciation should be charged for that? WDV or straight line method? Hello?
WDV.
WDV. So, every method has its own utility. Whereas there are some assets which goes completely out of use. Computer, laptop. Guys, I bought this laptop in the month of September 2019. And today this laptop, I remember the first day when I started the session, somebody messaged me personally and said, your laptop is fully charged. Right? Somebody messaged it. I don't know who. But somebody messaged it, your laptop is fully charged, and it's trying to give me a signal that why are you not removing the charger? But to him and to everyone, my laptop doesn't charge. If I remove the charger, my laptop will switch off. Hello? There's a problem. The battery is gone out. What to do? What to do? The battery doesn't work without charger now. So if it goes bad, means it goes bad. What to do? You need to get out of this only. I am just struggling with this laptop and thinking, okay, everything is working fine so far. Just charger has gone out. Let's stick with it one more year, because 2019 is just what? If you remove pandemic experience, 2019 is just what? Like yesterday only, right? Hello? 2019 was just like yesterday only, because entering 2020, we were under pandemic.
Right.
We didn't realize 2020 and 2021 how fast and quick they gone away. So I'm still into that, a dream that 2019 was just like yesterday only. I did buy this on yesterday only. Let's keep it. Laptop hai, 2-4 saal to chalna chahiye na. Yes or no?
Yes.
So that's why I'm not selling it. So that's why I'm still using it. So what happens? Hello. So what these kind of assets, which method should we charge? Is it like a grandpa's house where we can use for 20, 30, 50,
SLM
40,
method
100 years? No. So obviously we should charge SLM. Hello, practically. Yes or no? Right. But do any company charge depreciation, or can you force any company to charge a particular depreciation for a particular asset? No. That is also need to be understood, Nikhil. Doesn't matter how logical you are in charging your depreciation method, but tomorrow if you see, no, there are companies which are charging even their laptops at WDV method. You cannot go and say this is a fraud. Hello, this is not logical. I agree. And being a science graduate, a engineering college you have passed out, right? IIT Guwahati, I forgot which college, but I forgot. So being from there, you would definitely feel like, no, this is illogical. I agree. It can be illogical, but is it a fraud? No. Why? Because according to accounting principle, companies can choose their own accounting principle. Only thing need to do is what? They should follow that consistently. So another accounting principle which comes in mind is what? Principle of consistency. Hello? What method? Principle of consistency. Hello? Whichever method of accounting the company follows, or the company choose to follow, should be followed by the company consistently. Hello? Consistently. It should not be like this, that this year I charge laptop at a WDV method, next year I charge the same laptop at a SLM method. No, boss. No. Whatever principles you are designing for yourself from the tool of accounts. So tool of accounts is giving which two methods? Hello? For depreciation charging, which two methods are there?
SLM and
Straight line method and reducing balance method, or written down value method. These methods are there. These are the tools. This is defined. Okay. Now, as a company, Astitva, you chose SLM method to be charged on building. It's your choice. Okay. Nobody can say, oh, Astitva is doing fraud. Hello, no. Astitva is not doing any fraud. It is his choice, man. It's your choice, right?
Yes.
You chose SLM method for buildings, but only condition you need to follow is what?
Need to follow it for every year.
Consistently for every year. And if you are digressing from it, there should be a solid reason for it. Hello?
Yes.
If you are digressing from any particular method, there should be what?
Disclosures.
There should be disclosure as well as solid reason. Any disclosure
But Sumit,
on the name of disclosure, any can do fraud, na? Tomorrow I go and loot Bank of Maharashtra, and day after tomorrow I will give a disclosure on Facebook. See, I have looted the Maharashtra. I haven't done any fraud. I'm disclosing. Hello?
Yes.
Right. So it is not just that on the name of disclosure you keep on doing frauds. No. There should be disclosure, but there should be reasoning also. Yeah, Tejaswini, you were saying something.
Yeah. So on what basis these companies actually choose these methods? I mean, do we have a particular logic as in, okay, this is the reason I'm going?
I guess you are repeating the same questions which I already answered. I told you there are two logic, right? Straight line method and
Correct.
WDV method. Now up to you, Nayar, it's your choice. See, on what logic did you decide that you didn't want to go for engineering? Have you done engineering, Tejaswini?
No.
The choice is there, na? The colleges are there. Government
So we
has
don't
given you the
have
choice.
to prove or probably give any logical reason as
You
in
see,
why we
it's
have
up to
gone to a
you. You
particular
want
method.
to give few people in the world understand logic, but you cannot expect everyone to understand the logic. Tejaswini, understand my point. So, few people you will ask when they are in 8th standard, you will ask them what you want to become. You will say, I want to become doctor. You will get surprised how clear this person is in his mind, right? That at the age of 12, 13 only, he's decided that he want to be a doctor. Now, and then few people you go and ask, even at the age of when they are already 18 plus and they are already in 12, you ask them what you want to do. Even they would have chosen commerce, still they are not clear. So few people are clear in their mind, they're logical even in the age of 12. Few people are not logical and not clear in the age of 35 also. Right? Warren Buffett was clear at the age of 12, 13 also. So he became the richest person of the country, world, second richest by investing. I am not clear even today. So I am like, you are sitting right in front of you. So the choice, the tools are there. I cannot go into logic, what company is applying what logic. I gave you the tools. I gave you the logic also that a building should not be depreciated on SLM. But even after that, if there are some companies which are using SLM method for charging on depreciation, don't say, Tejaswani, that Sumit had said it is illogical. No. It is the company's choice. Hello. It's a democratic world. It is the company's choice. They want to choose SLM. It's their choice. Then don't quote Sumit Rathi saying that no, it is illogical. No, it is not illogical. By no definition, it is illogical. These are the tools. Whichever method you want to choose, you choose. You have the democracy. Is it clear?
Yeah, okay. And I have one more question. So when you're saying that when we are digressing from a particular method, right, we need to have a proper reasoning. So what could be those reasons to switch from one method to another? Can you just cite one or two examples?
See, it depends. It depends. The company is following, for example, a straight line method for a building from last 10 years. Okay. And now, by all logic, it should be completely out of use. Okay. Then suddenly some chartered accountant got changed and he said, where is the building out of use? You are still using a building. Hello? You are still using the same building. But the promoter will say, no, but we have completely depreciated it using straight line method. So whatever you have done historically, it's fine. But today, now it give a proper disclosure to the government. And the reason that we thought that this would get depreciated in the next 10 years, but it is not getting depreciated in the next 10 years. Now still it's the same position the way it was 10 years old. So we believe that we are now going to use even further 10, 20, 30 years. It seems that out of our experience, we realize that this asset we thought would get depreciated in 10 years, but it is not getting depreciated. It is actually at the same level. And it is very much in use. And still its usability and reliability is the same. So that's why rather than charging depreciation on straight line method, let us charge depreciation on WDV method from now on. Right? So
okay, got
situation to situation, it will be different reason. It only if you are a part of the company and only the situation is coming in front of you, then only you can decide. But this can be the reason. One of the reason. I just cite an example for you.
So one more question.
Yeah.
Sir, what about the improvements that we do in the building in order to increase its efficiency or in the machinery also?
Yeah. So whatever improvement you do, you have to see from two phases. Was that improvement from a long-term perspective or was that improvement for a short-term perspective? Right? So for example, your daughter's marriage, Astitwa. Okay. You did a lot of improvement with respect to decoration.
Yes.
Yeah. And the house is looking like is looking better than your daughter. That is how it's looking after decoration. But those improvements are transitory, right? Short term. So that will not add any value to the building. But if there are some improvements which, and that would be considered as an expense in your income statement, okay? But on the other hand, for example, earlier all the walls were color painted. Now you decided to all the walls to be moved from color to tiles. You try to you want to put tiles on your all the walls. You think that it would improve the age of my house walls, and the leakage problem will also go away. There can be a number of reasons for that, okay? So now that improvement is going to stay for a very long time. The age of tile can be 10-12 years. So in that case, that improvement would be considered as capital expenditure, and definitely it will be added to the net value of your asset. The value of your asset will increase in the balance sheet.
So in that case, the gross value will get increased, and accordingly the depreciation will also get minus. Accumulated depreciation from that particular year.
Yes, from that particular year, you'll start charging depreciation on that value also, which you have spent on doing improvement in the form of capital expenditure. So improvement also you need to see from the perspective of the impact of improvement. Is it long term or short term?
So we defer if.
Sorry, yeah, go ahead.
So we defer it. We add it to the value of the asset, and if it's in something like AMC, annual maintenance charges, we'll keep it in the income statement.
Correct.
Okay.
Okay. So what is the important principle we learned over here, Nikhil? Consistency. Consistency is important, right?
Right.
And it is not only important in the accounts, Nikhil. If you see the consistency logic, it is improvement in any profession you are. Even if you are a cricketer, you need to be a consistent performer to be on the top. Yes or no?
Right.
So that's where accounting principle is also formed. Consistency. Okay. Going back, is it clear what is the method of depreciation? What are the two methods of depreciation? How to charge method of depreciation? Is it clear, guys? Everything, tell me. We will further talk about depreciation in one of our discussion of a case study. Then we will go even more, what do you say, horrorful form of depreciation. But right now it is enough. So far, is it clear, guys? Hello?
Yes, sir.
Yes, sir.
Yes, sir.
Cool. Okay. So coming back to our case study of tea stall. This is the file, right? Depreciation rate. So here we are assuming what is the depreciation rate to be charged? 10% in one method, straight line method. Hello? For all the assets. For the ease and convenience, we are assuming what? We will charge depreciation at what rate? Hello?
10%.
10%.
10%. And which method, sir?
SLM, straight line method.
Because it's not only the rate which is important, but also the method which needs to be important. Both the things are required, right? So what would be the depreciation? Tell me. We need to check balance sheet. What all are my assets? Hello? What are all my assets? Have I noted down all my non-current assets? Yes. These are all my assets. Yes or no?
Yes.
At the beginning of the year, right? So what would be the depreciation at the end of the year? Hello? The depreciation will be, so beginning of the year, these all are at gross value. Hello? Because this is the first time depreciation is getting charged. So these anyways are at gross value, right? This will always be the gross value. Net value keep on changing. Hello? Yes or no? So what would be my depreciation? Hello? So here somewhere I'm writing depreciation. What is my depreciation? Equal to 10% of all the asset value. Yes or no? Because all the asset, as I said, all the asset we are going to charge the same rate of depreciation. 5,700. And what would be the net value of the asset at the end of the year? What would be the net value of the asset at the end of the year? Hello?
Gross value minus depreciation.
57,000 minus.
Right. So can I calculate fixed not current asset value over here? Non current asset total. How much is that total?
57.
So what would be the, even if you do not consider or calculate all this, what would be the value over here? Basically, it would be 57,000 minus depreciation. 57,000 minus depreciation. Yes or no?
Yes, Sumit.
Hello? Yes, right?
Yes.
Now let's come back to income statement. From operating expenses, when we will reduce all these expenses, we will reach to where? Hello? When we remove, so what is my gross profit? Hello. First of all, let's calculate gross profit. What is my gross profit? Hello? Guys, do not forget. Hello? We talked about this. Hello? Look at the format again. We did it yesterday. From the revenue, we reduce cost of goods sold, we get gross profit, right?
Yes.
So let's look at the gross profit. What is my gross profit? Hello? Or should I ask calculate the total cost of goods sold? We can calculate the total cost of goods sold. What is total cost of goods sold? Equal to sum total of all these cost. Hello?
Yes.
All these are cost of goods sold, right?
Yes.
Correct.
So I can bold it. I can bold it. Now what is my gross profit? Hello?
Revenue minus profit.
65.
Revenue minus
Gross profit. Gross profit. Revenue minus cost of goods sold. What is my revenue? 65 minus cost of gold. This. Is it clear?
Yes.
Yes.
Now from gross profit, if I reduce all the operating expense, what I'll get? Hello?
EBITDA.
Hello? EBITDA. EBITDA. Correct. And what is EBITDA? Equal to gross profit minus sum of all the operating expenses.
Operating expenses.
Now from EBITDA, we will reduce what? Depreciation. If we reduce depreciation from EBITDA, what will reach to?
EBIT.
EBIT. From EBIT, we will subtract or add non-operating expenses and not operating income, right?
Yes.
But are we assuming any debt in this? No. So is there any interest expense? Hello?
No.
Zero. Right now, are we assuming any investment? No. So is there going to be any interest income?
No.
If you would have assumed something, definitely there would have been. So 0, 0. Now, if we reduce all this, we get what? EBT. What we get? EBT. Equal to 36 lakh minus sum of both.
Same
From
amount
in this case, same amount, because interest expense and interest income and all other non-operating income and we are assuming nothing under non-operating. See, why are you so surprised? Hello? If there is no interest expense, see, if you are doing a business and if there is no interest expense, even after that you go to bank, no, I earned 30 lakh rupees this year, take 10 lakh rupees as interest. Hello? You haven't taken any loan. Even after that, you will go to bank and pay them 10 lakh rupees. Hello? Who is such smart? Hello?
Nobody will pay.
Is there anyone who would like to still pay the interest? Hello, Fiza? Would you like to pay interest? Saying that no, bank people are so great people. They are like God. Let's give them 1/3 of my salary. Hello?
No, sir, I will not.
Even after you haven't taken any loan.
No,
So
sir,
yeah,
no.
this business has not taken any loan. Why would it pay interest? Hello? Who said why same? Why not same, I guess say? Why not same? If there is no expense, why will you unnecessarily write down as an expense? See, it is not a mandatory thing for any business to take loan and pay interest. Hello, it is your choice of business. You cannot force. You are a banker tomorrow. Who is the banker in our group? Hello, who is the banker who provides working capital loan to businesses? Hello, who is the banker?
Yes, sir.
You are banker, Richa, right? Richa,
Yes, sir.
do you keep a pistol in your pocket and go to your client's place and put a pistol on their head? They say, no, you take loan from my bank, otherwise I will shoot you. Hello, is that
No.
you do the business?
No, sir. No, sir. Not
Unnecessary,
that.
you cannot put anyone under the force to take loan from you and pay interest. It is their choice. Hello, it is their choice. If they want to take loan, then only they have to pay interest. Unnecessarily, why would they pay interest?
True.
Otherwise, Richa will be after in jail, right? Behind bars. Sastitva,
Yes, sir.
why are you still so surprised to see a zero expense? Hello.
No, I'm not. No.
Somebody said, right? Why EBT and EBIT is same? Why EBT and EBIT is same? Who said that? Who said that? I want to know. Oh, nobody is saying anything. Okay, I'll keep a watch on it. I will read it. I will go through the video whenever the video comes and I'll find it out. Don't worry. Okay. Now from EBT, what will you pay? Hello? Tax. What will you pay? Tax rate is assumed to be 25%. See, we are living in a country with lower tax rate now because if you guys know, somewhere around 2019, right, Nikhil? Somewhere around 2019, the tax rate was reduced by finance minister of our country, right? I'm forgetting the right timeline. No, Nikhil would have a great idea about it.
So you mean to say the corporate tax reduced from 30% to 25%?
Something like that decision was taken by.
Was it in 2020?
That's what I'm forgetting. I guess no, not 2020. I was working back then in my old company. 2020, I was working in new company.
September 21st, 2019, sir.
Yeah, September 2019. So the tax rate was resumed to 33 से 25 कर दिया. मतलब depend on business and everything. If it is a startup, if it's a business started after some date, then even tax rate can go down to 17% also. Sorry, somebody saying something. Somebody saying something. Hello.
Sumit, no, I have a question. Maybe out of context.
Every
Sumit,
question is correct question. I will decide.
So Sumit, many times we see that there are loans taken from the directors or unsecured loans. So there is an interest liability which is there. So do we capture that in the income statement as well?
Yeah, it would be an expense. Hello. See, what is the principle over here? Hello. What is the principle? We need to understand what is the principle over here. Hello, Mr. Sarda. What is the principle? The principle is very simple. No, matching costume gas. What is principle? Principle is very simple. Doesn't matter whom you are taking loan. Every person is separate from business. Hello. Separate entity. Promoters are different and company is different. If company is taking loan from bank, company will have to pay interest. If company is taking loan from promoters, then it will have to pay interest.
Correct.
If company is saying to promoter, I want money from you, but not in the form of loan. Hello? Business is saying to promoter what? Business is saying to promoter what? I want to take money from you, but not in the form of loan. I want to take you money from you with the condition that I will never repay you. Then only it is equity. Then only it is equity.
Understood.
Right? A father and son are two separate entities. Hello. Even after father takes care of the child and invest in his future and everything, but if son does the crime, does father go into the jail? Hello.
No.
No, right? So like that.
Correct.
So if you're clearly saying to the owner that I am taking the money from you, I will as a loan, definitely you'll have to pay interest. Hello. Obviously.
Correct.
You know, if a son and father goes into a contract wherein a son take money from father, in contract he clearly writes that I will repay in 10 years this amount with this interest, and he doesn't pay. Father has all the right to go to court. Hello. If the written contract is there, father has all the right to go. Similarly, when the business is issue, when the promoter is giving loan in the form of unsecured loan to business, it will not be verbal. Hello, and it will not be verbal. Everything will be contractual. Absolutely. And that contract will always be there with the business person.
Correct. Understood.
Yeah.
Can it be interest free?
So if it is written in the contract, hello, father and son are getting into an agreement where father is saying, take the loan, just repay the loan, do not pay the interest. Contract. See, whatever contract says, yeah, as simple as that. Hello. It is not only a promoter giving businesses loan interest free, it is government also giving loan to businesses interest free. Hello.
Yes.
During the Coronavirus Act, banks in US told businesses do not pay your interest for the next 6 months of liability. For the next 6 months, do not pay interest. What to do? Business will not pay. It should be written in contract, whatever has entered into contract. right? In the contract, it is given that unsecured loan I'm giving to you and you have to pay 5% and business seal is there. That business seal is business sign. If business seal is there, business is agreeing. Okay, give 5%. Give 5%. If it is free, it's free. Okay, come back to text. What is the rate of tax? Hello? 25%, right?
25%.
So EBT into
25%.
25% is tax. Then what would be my PAT? So profit after tax of this business is how much? How much?
27.59.
So those all who is earning, those all of you is earning less than 27 lakh rupees per annum. Seriously think of getting into this business of selling tea. Seriously. Okay. Selling tea can make you rich by 27 lakh rupees, can give you a profit of 27 lakh rupees. Cash, we will see, does business really get 27 lakh rupees of cash or not? That we will see in cash flow statement, but still. You think about it, starting a business of what? Selling tea. Selling a tea can make you prime minister of the country also. So just think about it. It's a serious business we are talking about, guys. It's not fun.
Maybe he's the only exception.
No, there are many businesses which are profitable from day one. A lot of trading businesses which are also profitable from day one. But yeah, tea business is definitely profitable. There's no doubt in that.
Yeah, I mean, becoming a prime minister is a secondary question, but definitely we can make money.
Yeah, you can make money, right? Guys, if the objective is to really earn money, if that's the only objective of working, no, why to work for others? Yeah, have your own business. This guy MBA Chai Wala is younger than all of us. And now, after he had proven Nikhil, after he has proven that MBA, a person can sell tea and make money, right? He has proven it. His turnover has gone to 5 crore plus. He must be earning somewhere around. His name is Praful Bilore. Now, you know what are the different sources, Nikhil, he has started making money out of. Now, there are people who learn from Praful Bilore how to do business. So he's created his own stories and everything. And there are 1,000 now avenues through which he would be earning money. So he started something called as what?
MBA Chai Wala
Academy.
He started his own academy. He said, I didn't go to MBA college, but I'm here starting an academy. Drink tea and take degree. Hello? Drink tea and take degree. Storyboarding, right? So there are multiple sources of making money for him now. Right?
Great.
Right. So selling tea can make you a great entrepreneur. So
I read in a newspaper. I read news in newspaper. I think few days back. There is one MBA Sabjiwala also in Bihar. He is actually an MBA from IIM Ahmedabad.
Great.
He's
So
not yeah.
More tea vetted.
Sabji also have a lot of money. A lot of profit there is there in Sabji.
Right. And he's not just, I mean, doing it for the purpose of, I mean, making money. Of course, that is the prime objective of it.
Yeah.
But also for the upliftment of the farmer, you know, the backward area. So it's a kind of a social cause also behind
and
it.
then government will also support you, will give you some kind of subsidies and all, and you would realize that whatever money you are making, 2 crore, 3 crore, 5 crore, or 2 lakh, 5 lakh, 10 lakh, you do not have to pay any tax.
Right. And his, I think, turnover is around in 3 crore or 4 crore something.
Oh my God.
Yeah.
So that's why I'm saying that is another reason of why I take chai business. No, we doesn't, and see, all the expenses we have covered are well thought of. Hello. All the expenses, if you really sit down and think about it, all of these are really doable. If you open a tea stall into a place which is near to a mall or a office complex or a tech city of Bangalore or any other tech city, you know, Hyderabad, all these cities, you know, Noida nowadays, I visited Noida, Nikhil, maybe last week, and I had visited in 2015 last. I was seeing the change, the way Noida city has changed dramatically in last 6 years. You know, So a lot of corporates are coming. So if you can really open this in a very near to a corporate place, this kind of unit economics is highly achievable, guys. They're highly achievable. Okay. All right. So this is about income statement, guys. Now let's go to balance sheet. Before going to balance sheet, let's go to cash flow statement. Now tell me one thing. We have made expense of how much in the name of depreciation? Hello? How much expenses have we made in the form of depreciation in income statement?
5,700.
5,700. My question is has Kailash joined?
Yeah, Sumit, I'm here.
Okay. So Kailash, remember my question. What my question is? My question is depreciation a cash expense, Kailash. When you are charging depreciation as an expense, are you paying someone cash? Hello, Kailash. Is business paying cash to someone?
No.
See, when he's charging the expense towards total salary of 60,000, is business paying cash to someone? Yes, it is paying cash to whom? To Chotu, right?
Right.
But when company is charging depreciation, is it paying cash to someone?
No real cash transaction happening there.
So no real cash transaction, but what is depreciation resulting into? Isn't it resulting into decrease in profit? Hello?
Yes, it is. Yeah.
So should my cash reduce? Hello? Should my cash reduce?
No.
Plus, no. So when in cash flow statement, my profit is reduced. My profit is now here. The profit is out. We already calculated. My profit is reduced profit, but my cash is not reduced. What should I do? I should add back what? Depreciation. Hello? Yes or no? I should add back depreciation. Yes or no?
Correct.
Yes.
Right? Okay.
I didn't get that, Sumit. If
How?
there is no real cash transaction happening.
If the real cash transaction is not happening, does it make sense that my profit should go down by 5,700? Hello? Are you paying someone cash? No. But still, are you reducing your profit? Yes or no?
Yes. Okay.
Right. So should my cash reduced? Should my cash be reduced? Hello?
No, cash should not be reduced.
So if the entire logic of calculating the cash balance and the starting point is profit, don't you think I'll have to adjust this profit by adding 5,700 back
I
to
got
it,
it.
because
Okay.
this profit is showing a lower balance.
Right.
It is not a exact cash balance. You don't need to add back 5,700 to reach to cash balance, right?
Right. Right.
So it's not about depreciation. Any other non-cash expense, if it has happened ever, you need to add them back. Okay.
Okay. So again, the formula of decrease in liability will add up to.
So here it's not about liability and anything. Here you can have a different formula itself. It's very simple formula. In depreciation expense, depreciation expense will result into what? Into decrease in profit. Yes or no?
Yes.
Decrease in net profit. However, should my cash increase? Should my cash also decrease? Should my cash also decrease?
No.
Hello? Hello? Should my cash also decrease?
No.
Kailash?
No, cash should not decrease.
Decrease. No. So if all I have to do is to start from net profit to reach to cash, should I add back depreciation or not?
Yes.
So that's why to reach in the journey of reaching from net profit to cash balance, I need to do what? I need to add back
Depreciation
and any other non-cash expense, if there is any. Is it clear?
Yes.
Hello? Any question, guys? Anyone?
We'll be adding this to the profit, right?
So we added it back to the profit. Hello? See? We are adding it back. Hello? Sachin?
Yes, sir.
We are adding it back. Hello? Yeah?
Yes, yes.
Okay. So now, this will give us what? Cash flow from operating activity. From Operating activity. What is the cash flow from operating activity? Sum of net profit, depreciation, increase in debtors, increase in outstanding salaries, increase in creditors, increase in prepaid expense. All these adjustments okay. So this is what my cash. See, my operating profit is how much? My profit is how much? 27 lakh. But actually, what cash has flowed into the business because of operation? Hello? What cash is actually coming into the business through operations? Hello?
24 lakhs.
24 lakhs.
24 lakhs. So now you're getting my point that net profit can be illusionary. Hello? Net profit can be illusionary because my cash can be higher or lower than the net profit. Hello? My cash can be higher or lower than the net profit. This is only cash from operating activity. It is not the total cash. Now from here, we need to also check if there are any cash inflow or outflow in the form of investing activity. Did we do any capital expenditure this year?
No.
Any did we purchase any asset? Any asset purchase?
No.
If we would have purchased any asset, we would have reduced that cash, right?
Hmm.
Did we sell any asset?
No.
No.
If we would have sold any asset, we would have added that value over here because buying and selling the asset is investing activity, right? Similarly, did we receive any investment income?
No.
No.
So we'll consider that as to 0. Now coming back to financing activity, did we borrow any money?
No.
So no inflow. If we borrow money, it is a cash inflow. Yes or no into the business? Hello?
Yes.
Did we paid any money? Paid any loan? Hello? No, we didn't pay. Borrow नहीं किया तो pay क्यों करेंगे? Hello? We haven't borrowed. Why would we pay?
नहीं borrow भी नहीं है और कुछ भी नहीं है.
So it would be, if we would have paid, it would have been a negative cash outflow.
Yes.
Did we pay any interest? Hello?
No, sir.
So then what would be the outflow in the form of interest expense? 0.
0.
Right. Okay. So what is my net cash flow? Equal to cash flow from operating activity plus cash flow from financing activity plus cash flow from investing activity.
Cash.
Cash flow from investing activity and cash flow from financing activity.
Taxation.
Hello?
Provision for
huh? Say something clearly. Hello. Whosoever wants to say
somebody ask about taxation.
What taxation? तो क्या अभी ऐसे तो मैं बोल दूंगा अस्तित्व. तो क्या अस्तित्व? कुछ होगा तो पूछूंगा ना. You need to ask. You will just throw some word at taxation. The taxation is already taken care of. Ask a clear question. Then only I will be able to answer.
Provision, sir. Provision.
Sorry?
Provision for taxation.
Did we create any provision?
No.
So what to do? No, we didn't create any provision. So there is no provisions. Okay. Yeah, if you would have created any provisions, then only it would have come. Cash flow from financing activities. This was cash flow from investment activity. Now, if you want to pay dividend, then where will dividend come? Under financing activity or investing activity? Under financing activity.
Financing activities.
Okay. So if you pay any dividend, then it will come over here. Dividend paid. So during the year, what is the net cash flow? Hello?
Tax 15,900.
Okay, now let's go to balance sheet. So we have already done what? Our current assets. Two current assets are there, debtors and prepaid. Non-current asset total is already there, 51,300. Liability is already there. Current liability, outstanding salary and creditor. Non-current liabilities, have we taken any loan? No. Equity fund. Now, how much the share capital was invested by partners? 1 lakh. Right? It would remain as 1 lakh. But during the year, is there any reserve or surplus? Hello? During the year, any reserve and surplus?
No,
Where it will get added? Hello? Why not, sir? Why not, sir? Remember, hello, look back again the format. What do we do with reserves? Hello, look at the format. If the reserve is there and if that is not distributed as profit, hello. If the reserve is there and if that is not distributed as profit, where will it go? As dividend. If profit is there in the company and not distributed as dividend, where will it go? Hello.
Reserve category.
Reserve. So reserve hua ki nahi hua? You're saying reserve is not there.
No, sir.
Retained earnings or reserves? Hello, yes or no?
Yes, sir. Yes, sir.
Right. So what will come in surplus? You can call it surplus. You can call it retained earning. So what will come in the surplus or retained earning equal to the profit which you had minus what? Dividend which you pay. Where do you show dividend? Cash flow statement. Dividend paid is 0. So what is my total liability? Equal to shareholders fund plus total loan plus current liabilities, right? Hello?
Yeah.
This is my total liability. What is my total asset?
Long-term asset and our current asset.
Long-term asset plus
current asset.
Current asset. What is the current asset which is missing?
Cash.
Cash. So we need to notify for cash. Right now, is my balance matching? See.
No.
No. Why it is not? Why is it not matching? Why? Because cash is missing, right?
We added any cash.
So now let's do the adjustment of cash. What is the opening balance of cash? Hello. How much cash had come into the business? 1 lakh.
Can you come again?
1 lakh.
1 lakh, right? Out of which how much we had spent? 57,000 in buying the asset. Hello. In buying the asset, that's the cash you spent, right? So what was the balance in the cash at the beginning? 43,000. And what is the cash you earned during the year? What is the cash you earned during the year?
24,15,913.
What would be the ending balance? So what is the opening balance of cash? Opening balance of cash.
24,15,000.
Any opening balance of cash is how much?
43,000.
43,000. What would be the ending balance of cash?
43 lakh 58,913.
Right. So this is my ending cash balance. So the balance sheet we are making as of 31st March. So the ending cash balance will be
24 lakh 58,913.
right. And we need to add this in the total asset. Hello, yes or no?
Yes, sir.
Is it matching now?
Yes, sir.
Total asset minus total liability. Is it matching?
Total liabilities.
What is the difference? What is the difference?
0.
Just one question, Sumit. Why
Yeah.
we added this 27 lakh 59,213 in liability?
So you need to understand. Business earns profit. Okay. For whom? Who is the ultimate owner of this profit?
Shareholders.
Shareholders. So it should give it as dividend. For example, if it would have given the entire money as dividend, how much? The entire money. So what would have been the dividend paid? The dividend paid would have been, for example,
27 lakhs.
not 27. Whatever cash it has, it cannot give more than cash, right? It cannot give more
24
than
lakh
cash.
15,000.
So, for example, the entire 24,15,913 has been given as what?
Dividends.
Dividend. Then what would have been the cash outflow? It would have been presented as cash outflow. Then tell me what would have been the cash from financing activity? It would have been sum of all this. So what would have been the net cash flow? Zero. Hello, zero. And what would have been the balance in balance sheet over here?
Zero.
No, we need to clearly update it because no, it will come correct. 3,43,000. Only 3,43,000. What is this? We need to understand, Nikhil. We can't give more than cash we have. Hello, Nikhil. Though the company had made a profit of 27 lakh, but we understood that 27 lakh rupees is there. But would company have a cash of 27 lakh? No. So what cash it will have? 24 lakh rupees. So that can be given as dividend. So if the company is deciding to give the entire 4 lakh rupees of dividend, it would be left with what? Same cash which it had in the opening balance. It started the business with 43,000 cash. It will have ending balance because during the year, whatever it has earned, it has given as dividend. So what would be the profit? 27 lakh is the profit. 24 lakh rupees of dividend it has distributed. So it will be left with a reserve or retained earning of how much? Now comes the logic over here. Okay, I'll tell you the logic. You need to understand what is given back to the shareholder is given, but what is not given back to the shareholders, where should the business report it, Nikhil? It is a liability, you understand, for whom? Company. Why? Because shareholder is different and company is different. Who is the owner of this money? Who is the owner of this profit? Hello, Nikhil. Who is the owner of this profit, Nikhil? Company. No, man. Who said company? Company is doing all this business for shareholders. Hello. Owner of the company is who?
Shareholders.
So the profit belongs to whom? Shareholders. If company is giving this profit back to shareholders, then it will report retained earning as zero. Retained earnings means what? That earning which business has made but not paid. Means business has made that earning and retained it with itself only. But ultimately, who is the owner of that money? Shareholder. So it should be added where? It should be added in the shareholders account. Right? So that is why you are adding it what? Under equity fund.
Sumit, can you come again?
Barker. Hello?
Yes.
Mr. Barker.
Yes. Sumit.
This business is done by whom? Owner. This profit belongs to whom? Hello?
Owner. Shareholder.
So company at the end of the year should pay this money to whom?
Shareholder.
If it is not paying, then it should report it as liability or not? Hello?
Yes.
Where
Yes.
would, under what head it would report it as liability?
Surplus and retained earnings.
No. Would that is there? You know the answer. You're telling what I'm telling you. But try to understand. Think about it. For example, it's nothing like this. There's no that and no entry like that. Think about it. Who is the owner of this money? Who is the owner of this money, Mr. Barker? Hello. If company is not paying this money to shareholders, then where should it report it? The money in the books of accounts.
Balance sheet.
Should it not be reported as liability? If you owe someone to something to someone, don't you report it as a liability? Hello.
Yes.
Who the business owe this money to whom?
Shareholders.
Let Mr. Barker speak. I know everyone over here is intelligent. Mr. Barker and I am not intelligent. Okay, let us talk. Yeah, Mr. Barker. This profit after tax belongs to whom? Shareholders. If company is not paying to shareholders, that means company owe this money. Hello?
Yes.
Whom does company owe this money? To shareholders.
Yes.
So in whenever it will pay, it has to pay to whom? Shareholders only.
Correct.
It has to pay on to shareholders only. So if this liability the company has to repay to shareholders, then should not it be logical to present this liability under the shareholders account only? So that now company doesn't only owe 1 lakh rupees, company owe 1 lakh rupees plus 3,43,000 additional, hello, which is not paid in cash to shareholders, hello.
Yes. Okay.
It cannot start reporting this liability as loan. It will not give this 3,43,000 to some banker. Who does it owe to? Hello.
Shareholders.
So isn't it logical for the company to pay to shareholders because it is owed to whom? Shareholders.
Shareholder.
You want me to, if you want to pay this money to banker, don't you think that is non-intelligent thing to do? Hello, why would business give this money to banker or to anyone else? Hello.
Yes, I understood.
Now you understood why we are putting retained earning as a part of equity fund.
Yeah, understood.
Because equity fund is why even what is the logic of reporting capital over here? Hello, Mr. Barker. What is the logic? Why are we reporting share capital over here as liability? Hello?
It belongs to owner.
It is given by money. The money is given by owners, right? So company owe this money to whom? Shareholders. So any
Shareholder.
money which company owe to shareholders, don't you think it's logical to put under this category only?
Yeah.
Rather than putting all over the balance sheet at 1,000 and crores of places. Hello?
Yes. Sir.
Mr. Barker, it is just accounting. Accounting is nothing but reporting.
Yeah.
So for example, if you maintain a balance wherein in one page of your book, Mr. Barker, you write what you spend on coffee. On second page, you write what you spend on tea. On third page, you write what you spend on clothes. And on fourth page, you write what you spend on mobile bill. Now, your wife pays on your absence. Okay, so I guess somebody has launched the poll. Hello? Shashank, have you launched the poll? Shashank? Guys, are you able to see some poll on your screen? Hello?
Yes.
Yeah, we can see untitled poll.
This must be admin.
Yes, sir.
Yes, Sumit.
Okay, guys, please do the reporting. Then I'll,
Sir,
Mr.
I
Barker,
have
I'll come back to you.
Please read the faculty.
Mr. Barker,
Yes,
I'll
sir.
come back
So
to you.
this
Okay?
is a monthly activity that we do, and
Okay.
some kind. I mean, just to get some feedback on how
Not an
things
issue.
are
Yeah, not
progressing.
an issue. Okay.
So what
All
is the higher number? 5 is good, right?
Yes.
Yes.
All fives, please.
All right. So, Mr. Barker, I'll come back to you for this. Okay? Remember this example I was just about to give you.
And 4, please rate the content used in training.
Any questions?
Rate the content used in the training. 1, 2, 3, 4.
Yes, it speaks about the LMS content and the content like what sir is using to teach. That's it.
4 is a good number.
Yes, anything 4 and 5 will be really. I mean, it's good.
Okay.
Sir, most of them have already filled, so I think we can continue on with the
All
with
right.
this session.
Okay. Thank you. All right. Mr. Barker, are you back?
Yes, I'm back.
Okay. So what are we talking about? 4 slots,
Talking
4 pages, right? One page you are writing what? Tea. The money you spend in tea. One page you are writing the money you spend on coffee. One page you are writing the money you spent on mobile bill, and one page you are writing the money you spent on clothing, right? all of a sudden one day you were not at home and the mobile bill is paid by your wife, right?
Okay.
And you come back and your wife says, I paid the mobile bill. Now where will you report that as an expense? On which page will you report the expense as an expense?
Where I have written the mobile bill expense.
Right, the page which you have dedicated to mobile bill. Yes, so this is the space which is dedicated for all the liabilities which is created into the business because of owner. So obviously you will report all the profit over here only, yes or no?
Yes.
It is just a reporting thing, right? Anyone has any confusion? So if, for example, if you believe that dividend paid is 0, Mr. Nikhil, if you believe that the dividend paid will be 0, hello, if you believe the dividend paid is 0, the entire profit will be transferred. Hello, the entire profit will be transferred as retained earning because company has not distributed even a single pie from its profit. Right. So the entire profit is nothing but liability for the business, right?
Yes, yes.
Yes or no?
Yes, understood.
Anyone has any confusion over here, guys? Tell me. Anyone has any confusion?
So Sumit, in case of a single owner company or a proprietary company, does it get transferred to the capital account?
Yeah, see, whatever it is, because if business is holding, see, generally in a single holder or proprietor business, they do not keep a different balance sheet and income statement only.
Okay.
Generally, because whatever, it's only an excuse of independent liability. Sorry, what is the principle? Again, go back to the principle. What is the principle? The separate identity principle is an excuse for sole proprietorship. Only in case of sole proprietorship, this principle doesn't apply.
Yeah.
So they do not separately maintain different tax. Sole proprietorship is same as a company, and company is same as sole proprietor. The promoter is same as sole proprietor, and sole proprietor is same as promoter. Okay. Yeah.
एक्चुअली रिक्वेस्ट है, मतलब अगर आपको लास्ट के 15 मिनट्स है ना, अकाउंटिंग के एक बेसिक 3 रूल एक सब मतलब इंक्लूडिंग सबके लिए अगर आप समझा दोगे ना तो बहुत सारे इनके कंसेप्ट क्लियर हो जाएंगे.
क्या चीज?
ये जो डेबिट द रिसीवर क्रेडिट द गिवर, वो अगर
वो
जो
नहीं,
पर्सनल रियल नॉमिनल,
वो नहीं कवर करेंगे अपन.
ठीक है
वो नहीं करेंगे, वो जरूरत नहीं है उसकी. मैं बिकॉज सी आई डोंट वांट एनीवन टू बिकम अकाउंटेंट, चेतन सर.
हाँ, मुझे सिर्फ लगा कि बोले सर. ओके सर,
है ना. बट ठीक है, कभी मैं ले लूंगा उसको भी. चलो, कभी मैं ले लूंगा. जिस दिन मुझे लगेगा ना कि यार टुडे वी आर रनिंग quick and as per our schedule everything, then I'll take out some 15-20 minutes for that, back of my mind.
Okay.
Honestly, I'll take it. Okay. But right now I don't want anyone to become accountant, है ना. अच्छा. Okay. Cool. So guys, this is what creating income statement, balance sheet and cash flow statement is all about, guys. And I'll share this file with you. This is all we want to know about what? Income statement, balance sheet and cash flow statement.
Hello.
Yeah.
Sir, if can I ask?
Now you can ask the cash flow statement out here.
Yeah, sir. Actually, I had an interview 2 days back.
I asked the question back. Directly come to the question, Aditya.
Okay, sir. So they asked me what is the significance of how the non-cash transactions impact the cash flow statement. So this is
the
first
question. You give me the answer, right?
Basically, sir, non-cash transactions does not affect the cash flow.
Yes.
But only it just affects only for the depreciation purpose. So only for no. So I have told one more point also. For the depreciation purpose, we take into consideration depreciation or the tax purpose only, right? Like net of tax only we take as in the depreciation.
I don't know what you're saying.
I'm saying, sir, like when we add or subtract depreciation, we take the net of the tax, net of depreciation, right? We subtract tax.
You are saying two different words. Net of tax. Sometimes saying you are saying net of depreciation. Sometimes you are saying net of tax. So first clear your head. Ask us clear question.
Okay, sir. I will get back to you on this.
No, get back. You clearly you ask the question. You know, अभी 2 मिनट सोच के बोलो आप. मैं ये बोल रहा हूँ.
Okay. So can I say it in Hindi if you have no issues?
Whichever is comfortable for you.
Okay. So sir, हम जो depreciation लेते हैं cash flow में add करते हैं, तो हम उसको सिर्फ टैक्स पर्पस के लिए ही कंसीडर करते हैं.
कैश फ्लो
point,
में कैश फ्लो का टैक्स से क्या लेना देना? There is no relation of cash flow statement with tax. Hello.
Yes, sir, I am listening.
There is no relationship of tax and cash flow statement. Hello. There is no relationship. In income
Okay.
statement, you can say yes, we take tax. When we take depreciation, it gives us tax advantage.
Okay.
Why? Because
Okay.
your EBT goes down.
Hmm.
So here, if there would have been no, see, when there is depreciation, what is the EBT? Sorry, what is the PAT?
Sir, if there is no, we will be adding depreciation. We will be adding.
Hello. Listen to me clearly, Aditya. Don't jump to the answer. I'm saying when there is depreciation, what is the PAT?
2759,213.
Correct. So let's copy it and paste it over here.
Right.
Right. Now, for example, there is no depreciation. If I remove depreciation from here, what is the PAT?
2763488.
So are we paying higher tax or lower tax? Or my PAT is lower or higher?
Sir, higher tax.
Higher tax, right?
Yes, sir.
Again, guys, look at it. Forget about the PAT. Look at tax amount only. So when I'm paying depreciation, what is the tax I'm paying?
When we are
when you are charging depreciation, what is the tax you are paying? Tax in case of depreciation, right?
Okay. 919737.5.
Right?
Yes.
Now, when we are not paying any depreciation, what is the tax I'm paying?
921163, approx 62.5.
So tax in case of no depreciation. So paying depreciation is advantageous from what perspective?
From tax point of view.
Pay depreciation, if you charge, sorry, you don't pay to anyone. If you charge depreciation, it gives you what? It gives you an advantage of paying lower tax by how much? By how much?
Sir, by the amount.
1045. Here you are saving 1045, which is nothing but 25%.
Yeah, actually, that is what I am trying to say, but I am not able
25%
to.
of 5700. So exactly that is the money you will save. Hello.
Yeah, sir. That is what I am trying to say.
Charging depreciation is tax. Now you made your question. Let me give you answer. Okay.
Okay. Sir.
When you charge depreciation, it gives you tax advantage.
Yeah.
Okay.
Yes,
by
sir.
giving tax advantage, you will pay lower tax.
Okay.
In case when you are charging depreciation, when you are not charging depreciation, you will pay higher tax. Okay.
Okay. So,
but
sir,
whatever you have done, whatever
yes, sir,
you have done, Aditya, over here, whatever you have done over here, Aditya, cash flow statement is nothing but replica of income statement. Whatever profit is there, you set it over here. Whatever depreciation is here, you set over here. If you are charging no depreciation, the amount of depreciation will be 0. If you are charging depreciation, the amount of depreciation will be 5700 over here. As simple as that.
Sir, I got your point. So my concern is, should we include this point in while explaining the concept of cash flow? Like
no, so you're confusing other one, na?
Okay. So only the answer should.
Whenever in an interview somebody asks you that what is the impact on cash because of non-cash items, you say 0 impact.
Okay.
And if my profit is reduced because of non-cash expense, then I should add it back in order to calculate the final cash from the cash flow statement. But as such, my cash should not be impacted by non-cash expense. Simple, right?
So only for the specific question related to the depreciation, how the depreciation impacts.
This is a very general question in the interviews they ask in order to confuse people.
Got your point, sir. Okay. Actually, they asked me, so that's why.
Another question.
That's it, sir. Only for the depreciation they asked. Secondly, they asked for the depreciation and gain from sale of property or from fixed assets. These 3-4 questions they asked, and the enterprise value.
Okay, so you were, rest all the questions you were able to answer, right?
Yes, sir. Yes.
Okay.
And they asked one more question, but I think that I will ask in the later classes, because that is specifically related to the.
What is the question?
Sir, they asked me about the valuation techniques of valuation techniques.
So that we will cover in detail. Okay.
Yes, sir.
Cool.
So at that time I will ask.
No, you will not have to ask itself, because I will clear so well, honestly, that you would not have any questions left.
Yeah, I think I don't remember one model. Actually,
I'm just kidding.
Actually, they asked me about the pitch book as well, pitch book and the memorandum.
That is also we will cover.
Yeah, so I will ask.
Would be our third last session or fourth last session.
Yeah.
Whenever that will happen. Okay.
Done, sir. Okay, sure.
Cool.
Okay. Thank you, sir.
Thank you.
Depreciation has no relation on cash, right? It seems because
It
we
should
have
not
anyway
impact your
taken the
cash.
effect of
Nikhil.
depreciation in the, in the
So
cash.
Nikhil, we need to understand as a process, we need to add depreciation back because what we are entering, what is my entry point? Net profit, right? So I know my net profit is crude. Is crude. What do you say? It's not filtered. Hello?
Right.
It is not filtered.
Oh, no,
I need to filter
I
it.
understood it. I understood. Just for the clarification.
But if the question is that does depreciation affect my cash position in a company? No.
No, it doesn't. Right. That's just
That's the answer actually you should need to give, because cash flow statement can be calculated in many ways. You can start with net profit. Here you can start with EBITDA also. So if you are starting with EBITDA, then you don't have to add back depreciation. Why? Because from EBITDA you haven't reduced depreciation. Hello.
Right.
So
and this sorry, just on EBITDA. This amortization, how we will, we have not taken any.
Because there is no
interest involved.
No, there is no intangible asset we have assumed. So
Okay.
if you example here, if you take a trademark or if you take any patent, and government gives you patent for 20 years. So what is the useful life of patent? 20 years, and it will be reported under non-current asset only as intangible asset. Okay. So patent for 20 years, if the cost of that patent is 3,000 rupees, so every year how much you will charge as amortization? 3,000 divided by 20 years, right? 20 years is the age of the patent. So every year you are using how much of the patent? 150 rupees of the patent, right? So that 150 will be amortization. So the way we calculate depreciation on the tangible asset, similarly we calculate the amortization on intangible asset. Depreciation amortization methods are one and the same only. The only difference is that depreciation is calculated on tangible asset and amortization is calculated on intangible asset.
Sir, can you just repeat this line? Actually,
depreciation is charged on tangible asset and amortization is charged on intangible asset. The way of calculation is same.
Sir, and can I ask one more thing?
Go ahead.
Sir, can you just differentiate between impairment and the amortization in term? Impairment of assets and amortization. Basically, I know amortization is basically for
Aditya, I know that you also know impairment also. Honestly.
No, sir. Actually, while explaining in the interviews, actually, sometimes I get confused in terms of I know the concept, but एक्सप्लेनेशन के टाइम पे सर थोड़ी सी दिक्कत ये होती है कि अगर वो पूछ रहे थे कि व्हाट इज अमोर्टाइजेशन एंड इम्पेयरमेंट तो सर उसको थ्योरेटिकली समझाना थोड़ा सा सर बहुत ज्यादा स्ट्रेच हो जाता है सर मेरे से ना, तो आई जस्ट नीड अ शॉर्ट एक्सप्लेनेशन ओनली सो दैट वो एक्सप्लेन करने में सर इजी हो मेरे को.
Okay,
that's it.
So it's nothing. See, both amortization and impairment are nothing but accounting mechanism. Okay. The problem with amortization is this, that you charge amortization on depreciation every year. Okay. As a practice, Aditya, now you need to unmute. Okay, you need to remain unmuted.
Yeah. Okay.
Okay. So the practice of amortization and depreciation is to be considered as a consistent manner. You need to calculate amortization every year of any intangible asset. Okay. But impairment happens when all of a sudden you feel the fair value of goodwill is not rightly mentioned in the financial statements.
So sir, is it impairment only for the intangible assets, or it can be for
generally
the
it is only for the impairment is only for generally for the impairment is only for the intangible assets, you rightly said. But what you say intangible assets in the form of tangible assets, you call the same thing as revaluation.
Okay. Got it.
Right. So what happens is this, at the time of acquisition, generally impairment is always in the case of goodwill only. So while you acquire any company, you report the goodwill as, for example, 120,000. Okay. After 5 years, you realize this value of goodwill is wrong. Now I'm not getting benefit of 1,20,000. I'm getting a benefit of 50,000 only. So all of a sudden you are reducing the value of 120,000 to 50,000. This is in that case, it will be called as impairment of goodwill.
Okay.
But every year, if you are charging an amortization at the rate of 10%, then that is amortization. That is like a normal charge, annual charge. Every year you will apply on any asset as consistent as possible.
So amortization and the impairment is like amortization is basically charged every year, and impairment is only on the specific.
When you feel that the fair value
on
of
the
the
specific
particular asset is going down
on the
on that
specific
specific year or event, you would impair the asset.
Okay. Okay, sir. Got it. Thank you, sir.
All right, guys, let's take a 10 minutes break, come back. Or if you guys don't need break, it's okay, I can continue. Because we'll start with a new concept called ratio analysis, which we actually scheduled for today. Tell me, need break, no break, tell me clearly.
We'll take breaks, Sumit, 10 minutes.
Break.
10 minutes break?
Sumit.
Mr. Baka, Pakka, we need break, huh?
Yeah, Pakka, sir. Yes, yes.
Okay, Mr. Baka. Kala is not responding to me from last few days. I don't know if she's there today. She was there in the early when we joined, but I don't know if she's still there or not. Okay, we'll take break, right? 10 minutes, guys.
Sir, can you give me a feedback on my work which I have shared with you?
Yeah, I'll share at the right moment. I will share, Aditya.
Okay, thank you. Okay.
Okay.
Hello. 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 Hello.
Hello. Yeah.
All right, guys, are you back?
Yes, sir.
Let's move to ratio. So this sheet I will share with you guys, right? Let me put it on the chat. Have you guys got the file on the chat? Just check on your chat. Hello, have you guys got the file? Hello, on your chat, please check. Hello.
Yes, sir.
Received it.
Receiving, right?
Yes.
Download it. Cool. Okay. So those who haven't got it can request to those people who have got it, and those people who have got it can put it on WhatsApp group for you all. Okay.
Yes, sir.
So you can put it on WhatsApp group. Right. All right. What's the status of these 4 books? Have you guys ordered? Has anybody ordered? Hello. Why so much of silence? I don't know. Have people didn't come from the break or what?
Yes, Sumit.
Sir, which book?
These 4 books which I have given the name of, right? Must read books.
Sir, 2 books I have out of 4.
Which 2?
Atomic Habit, Psychology Money and Ikigai. Psychology Money में वापस स्टार्ट कर एक्चुअली हाफ में आया था लेकिन फिर मुझे लगा कि वापस रीड करना चाहिए तो वापस स्टार्ट में किया मैंने.
Okay.
But it's a fantastic book, sir. Psychology Money.
Cool. And Atomic Habit also you have read?
नहीं अभी मैं नहीं स्टार्ट किया सर. मैंने ये कंप्लीट.
साइकोलॉजी पे चल रहा है. ओके.
एटॉमिक हैबिट मुझे पता है, बेसिकली सुना हुआ है, तो पहले ये कंप्लीट कर रहा हूँ मैं.
ओके. व्हाट अबाउट अदर्स?
वो मुझे थोड़ा मतलब वो नहीं पढ़नी है मेरे को, इसके लिए नहीं.
अच्छा ठीक है, चलिए. ओके, कूल. What about you? What about you, Anurag? What is the status of this 4 books?
So Sumit, I have already gone through Atomic Habits a brief. Ikigai, I have gone through it. There is an app called Headway, so which summarizes the book for us. So gone through it, but yes, I have not gone through Psychology of Money. I was reading in another book, The Warren Buffett Way, but I'll definitely start reading the Psychology of Money now.
All right. Fiza, what about you? What is the status of these 4 books?
Sir, I've ordered the first one, Atomic Habits. I'll start with Atomic Habits.
Mr. Bakar, what is the status? Hello, Mr. Bakar, what is the status of these 4 books?
Sumit have not ordered the book, but I'll order for it.
Which?
Atomic Habit.
No, you can order Rich Dad Poor Dad also. Hello.
Okay. Yeah.
Start with Rich Dad Poor Dad. Don't go in this sequence. There is no condition to go in this sequence only. It is just I have written these names. Okay, there is no sequence. You can order Rich Dad Poor Dad today. Okay.
Okay.
सर मुझे फाइल पोस्ट कर दिया.
Sorry.
फाइल पोस्ट कर दी ग्रुप में.
All right, great. Hey guys, those who haven't received in the chat can check your email WhatsApp group. Chetan has sent the file on a WhatsApp group. Astitva, what about this group? What about these books? Hello. What is the status of these 4 books? Hello, Astitva.
Sir, I have read Rich Dad Poor Dad and Ikigai right now.
Okay, so what about Psychology of Money and Atomic Habit?
This I will make an order and get it.
Okay. Kailash Bhatt, what is the status of this 4 book?
Hey, hi, Sumit. I have Rich Dad Poor Dad. I have started reading it. I haven't read Atomic Habit, but I have read The Power of Habit by Charles Duhigg.
Okay.
So yes.
I guess that's fine then. And what about these two?
No, not yet.
So right now you're reading Rich Dad Poor Dad, as you said. So after that you can pick them.
Yes, I will come to these two. Yes.
Okay, makes sense. Nikhil, are you back? Hello, Nikhil, are you back?
Yes, I am back.
What is the status of these 4 books? Tell me.
Well, I haven't or neither ordered nor yet read any.
You are not into the reading habit other than newspaper, huh?
Yes, I mean I buy a number of books, but I hardly finish them.
You send me an address over here. This time I will buy it for you. Send me your address.
Halfway
I'll
I leave.
I will.
It needs, as I remember, you mentioned a consistency, so that I don't have.
So what I'll do is I'll send this book Rich Dad Poor Dad to your address. Send me your address in a personal chat to me.
Okay.
I'll send it to you, and then you read it. Now that this time this is coming from me, you might feel little more enthusiasm to read it.
I will have a liability to read it. Huh?
You can take it that way, okay? So you are bringing the concept in our discussion, huh?
Right.
Cool. Share me your address, exact address on the chat, okay?
Sure.
All right, Kishore Kumar, what about you? What is the status of these 4 books? Hello? Hello, Kishore Kumar? Hello, Kishore Kumar, can you hear me? Hello, Karan Shankar, what is the status of these 4 books? Hello, Karan. See, I'll make it a point that those who do not respond to my questions now, I would now respond to their questions also. Seriously. Maitri, what is the status of these 4 books?
I haven't bought them so much. I'm doing the modules in Imatica's
Alright, doing the
learning
modules
things.
and all is one thing, Maitri.
I'm
Reading a
going
book.
Alpha series, but which you had suggested.
So you're reading Alpha Ideas?
Yes.
Too much bogged up, huh?
Yeah. So add-on family is there. So obviously, like it's hard to.
Okay.
But I'll make sure at least one I'll read by next week.
ये अगर read एक करना है तो ये वाला तो ले लेना Maitri. Order this Rich Dad Poor Dad. Okay.
Sure. I'll do it. Yeah.
Rest, anyone would like to say something, guys, or everybody is hidden under the nice cocoon of this digital learning?
So there's one book called so Fiza here. There's one book called "Who Will Cry When You Die."
Who will cry when you will die? We will decide. But first, you read these 4 books, okay?
That's related to daily habits, sir.
There are 10,000 books, Fiza. I know the name of it, but you need all these 4 books. You need to read these 4 books. Okay? This is fine, right? I ask you a question. Rather than answering it, you throw one more question on me, right? That's a great strategy. But that won't work
I
with
was
me.
saying, daily habits. I was saying.
I know it's okay. It's good. It's a good book by Robin Sharma.
Yeah.
I have read that too. Yeah, Shinsi.
सर आपने वो ये बुक पढ़ी है क्या अभी रिसेंट में द जॉयज ऑफ कंपाउंडिंग?
हाँ, जॉय ऑफ कंपाउंडिंग देखी नहीं है, वो एक्चुअली प्रमोट बहुत करता है वो बंदा जो इसका मालिक है ना,
गौतम बेटर। जो जिसने भी बुक पढ़ा है ना उसका हमेशा पॉजिटिव रिव्यू है।
हाँ, वो बहुत अच्छी चीज है ना, बिकॉज कंपाउंडिंग है जॉयफुल। मैं भी एक एग्जांपल बता दूंगा कंपाउंडिंग का तो भी आपका मन खुश हो जाएगा। तो क्या मैं कंपाउंडिंग का एग्जांपल कर दूंगा तो खुश हो जाएगा।
उसने वो एक्चुअली कंपाउंडिंग नहीं पर उसने बहुत सारे एग्जांपल और उसके पूरा
I know the guy personally also. His name गुजराती बंदा है वो, उनका नाम
गौतम बेन।
हाँ, मिस्टर बैद, वो गुजरात से निकले हुए हैं। He started as when he is gone to US now. He started his journey as a waiter.
अच्छा।
He has gone through a very tough journey to become a good research, a good research guy.
Okay.
Hello.
Yeah. Hello.
Sumit, Yogesh here.
Yes, sir.
ऑनलाइन साइट है क्या इसके लिए? आई एम currently living in Warsaw, Poland, so I didn't
So
find.
you'll get the online copies of this file.
Okay.
Digital copy you can take, Yogesh. Na, you can take it from, so one by, don't take all the 4 in one go, but you can buy the digital copy now from Amazon or any other website.
Okay. Thank you.
And read the digital copy. So psychology of money you'll find on almost on all the global websites. So is Rich Dad and Poor Dad, because these 2 books are written by, all the 4 books are written by foreign authors. So these all are foreign authors written books. So you'll find on almost all the global platforms.
Thank you so much.
And Anant Kumar is saying that you can download this from Z Library. I don't know what is Z Library, but yeah, if you know that, you can download it from there.
Okay, I will try. Yeah.
Okay.
Sumit,
Haji.
myself
Haji.
Prasad here.
Yeah.
See, last week I got a call from a leading software company as for the role of a functional consultant. So I work for a bank right now. They ask the simple questions like how, if say for example, how the accounting entries are passed at the backend level when a customer comes and do a cash deposits, and they were asking about the accrual concepts and all those things, and they were asking about the lending process, how the lending process which takes place, and can you please explain me in the functional way. And they were asking about the trade finance process. How do you process it, and what is the functional things which is happening at the backend level? I could
Yes.
able to answer it, but when it comes to cash deposit and all those things, how can you please explain me how the accounting entries are passed at the backend level?
I will try to cover, Prasad. I don't think I would cover in it, but I would try to cover. There is a course called SIBOP which covers it.
Which one's that? SIBOP.
SIBOP.
Okay.
So which is only purely from the perspective of operations. Okay.
Okay.
Prasad, it's an operations job you're talking about. Okay.
No, they were asking something about functional consultant. So
These are all fancy names. Try to understand.
Yeah, okay.
Why would an IT company have a requirement of finance guys? So think about it. They are not in the business of investing money, Prasad.
Okay.
We are talking about financial analysis over here. We are not talking about accounting job over here. Hello.
Yes.
So
I'm just sharing my experience to you.
Yes, that's what I'm telling you. Since day one, if you remember, I clearly told you what is finance and what is not finance. Hello, guys. Anybody remember? Anybody remember what I clearly told that what is not finance? Hello.
Not
Have I made it
bookkeeping.
clear in the day one or not? That what is not finance? You remember,
Yes,
guys?
yes, sir.
Right. So what is not finance, I will not cover, Prasad. But honestly, if you want to become operational expert, मैं बता रहा हूँ आपको. There's a course called SIBOP, which is purely for operations. O stands for operations.
Okay.
It covers of all the operating entries, how to pass the operating entries in the backend.
Okay.
Right, in the backend, what operating activities to be done by accounts in the form of accounting. So, for example, somebody buys mutual fund. Okay. Somebody buys mutual fund. Then how that mutual fund entry is taken care by the investment bank. How investment bank credits the mutual fund, how investment bank debits the cash, something like that would be taken care of in the course like this. And in fact, trade life cycle, you mentioned, right? Trade life cycle, right?
No, trade finance.
Trade finance, right? Trade finance.
Lending operations.
Lending operations, all these would be covered largely. So we'll cover investment banking operations over here, which is to some extent related to trade life cycle, lending, and all everything over there.
No. I thought of sharing with you so that you may suggest something. So that's why I shared.
Correct. So this is not a finance job, which if you are looking to a finance job, that is not a finance job.
Okay.
Right. That is a pure operations job they are recruiting you for.
Okay.
So if you are interested into operations, you can send me an email. I will take out some time, and sometimes I will respond to you. I already have a huge email from Priyanka, but these days I don't see Priyanka joining the sessions. I don't know why she has stopped joining the session.
I'm really sorry to ask you. Can you please tell me your email ID?
Yeah, you guys already have my email ID, right? Too. So the spelling of Gmail is wrong. You can correct the Gmail spelling. Okay.
Okay, done. Thank you.
So
Thank you.
I'm not seeing Priyanka Chauhan joining the session these days. I don't know why she is not joining. She must be busy with something. But she has already sent me a huge email of questions, which is something related to her work, and I still have to respond to that because you need to bring out time, right? You need to bring out time from your schedule to really respond to that. But yes, soon I will do it. Okay. Anyways.
Sumit,
Let's come.
really
Yeah.
thank you for sharing this details. Thank you.
Okay.
सर साउंड नहीं है.
Hello. Can you hear me now? Hello. Hello.
Yes, sir.
Yes, Sumit.
All right. So ratio analysis that I was talking about. So as ratio analysis is a very important tool. It's a very important tool into the
Sumit can't hear you.
Hello.
Yeah. Can you hear me now?
Yeah.
Yes, Sumit.
Ratio analysis I was writing is an important tool of analyzing financial statements. Okay. So guys, enough of accounting. Whatever accounting we had to do, we done with accounting. Okay. And you guys can go through this entire thing, and then after going through this, what I would recommend, if you want to learn even more, what I would recommend is there is a lot of content on your LMS portal about accounts, and that there are some account statements of few companies which are there. You can download it from your LMS portal and you can go through that. If you have any questions regarding those statements, please bring it on. I would be happy to responding it. Okay. What you need to understand is that you should be good at reading the financial statements, not creating the financial statements. Okay. Now, dashboards, sorry, this screener, maybe you can find annual reports of many companies, or in fact all the listed companies annual report are there on dashboard, sorry, screener. For example, any company you name, Maruti, so their annual reports link will be here available easily. So you can download their annual report and you can find out where their income and profit and loss account is, and you can go through that profit and loss account, and you can read that profit and loss account and try to understand what is the profit and loss account and what is the business model of the company. Try to relate your profit and loss account with the business model. Are you getting what I'm saying, guys? Hello? Hello?
Yes, Sumit. Yes, Sumit.
Yes, sir. Yes, sir.
Right? So you read these annual reports more and more, profit and loss account, annual reports, all these, read more and more, and you'll get more and more clarification. It's as simple as that. If you think Lord Krishna is going to come in your dream and throw some magic on you, it is not going to happen, honestly. If you want to excel at it, I can only just help you, but it is you who have to really go through it. You need to take the pain to download an annual report, and you need to take the pain to see scrolling all these pages and find out where the income statement is, where the balance sheet is, where the cash flow statement is. And it is your pain. You need to take the pain to understand the relationship between these three. I have already shown you how to create relationship between all the three, right? So There's a long annual report. See how much pain you have to take. But you need to take that pain if you have to learn. If you don't have to learn, come here, enjoy the show. You have already paid. Few of you would have already paid. Few of you wouldn't have paid half. Whichever way you have made the payment to Imaticus, it's your concern. But yeah, here comes. So after scrolling it to almost 200 pages, here I'm now on statement of profit and loss account and balance sheet. Try to go through to the balance sheet of this company. Try to go through the annual report of the income statement of this company, and try to go through the cash flow statement of the company, and try to understand what is this line item. Again, we covered about this trade payables, right? We covered. So try to go through this inventory, stock, trade receivables. We have used this word, right? Try to go through it and try to cover, understand the relevance of this with the business model of the company. What would be the business model of the company? Hello? What would be the business model of a company called Maruti? Hello? Assembling the car, right? And selling the car, buying the prefabricated parts of pre-manufactured parts and assembling that and selling it, right? So do it. If you will not take the pen, read all these notes to financial statements. You do it, you read it, you will have questions, you ask it. Amortization we talked about, right? Intangible asset gets amortized based on their useful life, right? We talk about few things here and there. Go through it. If you will not go through it, you will never learn it. It's as simple as that. You think magic is going to happen. No, it is not going to happen. It's never going to happen. It's your task to read all these three statements from as many companies and their notes to financial statement. In notes to financial statement, basically what is described, every number, how every number is coming in the statement is described in note to financial statements, right? Every number, which how revenue is calculated, how income statement may rent is calculated, how inventory is calculated, how interest is calculated if company is paying any interest, company is having borrowings, how borrowings may interest is calculated, how dividend is calculated. Everything is described over here. Okay, so you need to go through it. Are you guys getting what I'm saying? Hello? Or am I talking to someone who is not happy to listen to me? Hello?
Yes,
Sir, we are getting you.
Yes, sir.
Right? So you need to take this pen to go through all these guys, as many income statements as you can cover, as many companies as you can cover. I told you the source where you can take it, right? They say that you can take the horse to the water. You cannot force him to drink the water. Hello? Yes or no? So I have shown you where the water is. Now you want to drink it or not, it's your choice. Hello? Are you getting what I'm saying?
Yes, sir.
Yes, sir.
Yes, sir.
So this is all what I have to say. Now ratio analysis, guys. So given that you have the financial statements of the companies, the income statement, the balance sheet, the cash flow statement, how to really do ratio analysis, how to really analyze those financial statements, one of the tool which you can use is ratio analysis. In order to analyze the financial statements with the name income statement, balance sheet, and cash flow statement, right? In order to evaluate the financial statements in the form of income statement, balance sheet, and cash flow statement, you need to use, you can use ratio analysis. Are you guys getting what I'm saying? Hello?
Yes,
Yes. Please.
Okay. So now ratio analysis is one of the tools. So what is ratio analysis? Ratio, what is word ratio mean?
Proportion.
Proportion, right? Looking things in proportion. So it's as easy as this, right? So for example, if I say height of Nikhil is 6'4", okay, and the height of Sumit is 5'4", or let's keep it simple, 6 and 5. Now who is taller? Hello, who is taller?
Nikhil.
And by what percentage is he taller? Nikhil divided by Sumit. Hello?
Yeah.
Right?
Yes.
Minus 1. Nikhil divided by Sumit minus 1. If I'll do, Can you get this meaning of, can you get that message? So what is the ratio of height of Nikhil to Sumit? 1.2, right? Or basically Nikhil's height is 20% higher than or Sumit's height. So ratio is a very common tool which we all are aware of. We studied ratio in standard what? Hello? Third, fourth, fifth, sixth, hello? Seventh,
Yes, sir.
right? So there are certain things of income statement which can be compared with the certain things of income statement, balance sheet, or cash flow statement. What I'm trying to say is this: there are certain line items in income statement which, if you compare with another certain line items of income statement or balance sheet or cash flow statement, it gives a lot of insight. For example, I'll take an example. For example, net profit is a line item from which statement? Tell me.
Income statement.
Income statement, right? So net profit is a line item of income statement in net profit. Now, if you compare it with the revenue, revenue is a line item of which income, which statement?
Income
statement.
So revenue is a line item of, and if you compare it with the equity capital is a line item of which income, which statement?
Balance sheet.
Balance sheet. So equity capital. Or if you compare it with operating cash flow. So operating cash flow is a line item of which statement?
Cash flow
statement.
Now each of the line items are belonging to these three statements, different statements, right? It can give you a lot of insight. So for example, when you compare net profit with revenue, what does it tell you? Net profit by revenue. What does it tell you?
The margin.
The margin, right? That how much profit we made based on the revenue, right? So this is called as net profit margin. Hello, this is called as what? Net profit margin. Margin in the price of the product, right? How much we made sales and how much actually net profit we made gives us net profit margin. If you compare net profit with equity capital, it gives us with what? Return on capital. It gives us what? Return on equity. Hello? What is equity capital? Hello? Equity capital is the money invested by shareholders. Hello? Yes or no?
Yes.
And net profit is the ultimate profit of the business. Hello?
Yes.
So if you compare in net profit with equity capital, what does it tell? That whatever shareholders have invested in the form of equity on that, how much profit are they making? Yes or no?
Yes.
So return on equity. What is the formula for return on equity? Net profit by equity capital. Similarly, if I compare net profit by operating cash flow, what does it tell me? Or rather, operating cash flow divided by net profit, what does it tell me? What does it tell me? It tells me that how much percentage of profit is converted into operating cash. Hello? Now remember that example. What was the net profit? 27 lakh rupees. What was the cash? Hello? 24. So what can we create a ratio and say, yeah, that how much percentage of profit is actually converted into cash? Can we calculate that? How? That my operating cash flow, that is cash flow generated by operation divided by my net income. Net income is already there, right? Here. So that means 88% of my profit is converted into cash. Hello? Can't we say that?
Yes.
So there's no name to this ratio. These ratios you will find in any academic book. This ratio you might not find in any academic book. This is something which investors generally use, but it is not there in any of the books. But what it gives a very important insight. Hello, what insight it does? It gives us that how much profit is converted into cash. That means how much profit is left to be converted into cash. Yes or no? That is also you are getting. Yes or no? Hello.
Yes.
Right.
There is it net operating cash margin ratio.
See, again I'm saying I don't know the name. Honestly, I don't know the name.
I think it is sir operating cash margin ratio only.
If it is margin, you need to understand revenue has to come there. Hello.
Yes, sir. I'm listening.
इसमें revenue है क्या?
No, sir.
So can we call it margin ratio, operating margin ratio? Hello. Whatever you are saying. So
Okay.
when I'm saying even I don't know the name, you can think about it.
Okay.
That would it be there in the accounting books? Hello.
Okay, sir.
Right. But because it's not there in the accounting book, does that mean that you can't calculate or best create a relationship between these two numbers? Nobody is stopping you guys. All these statements, there are line items which are there. There are some standard ratios which are there in your books of account. There are some standard ratios which will not be there in your books of accounts, but still you can use. Nobody can stop you. Hello. Are you getting what I'm saying? Hello.
Yes.
Okay.
Yes, sir.
Yeah. Sure. Okay. So ratio analysis is an important tool of analyzing financial statements. What is the act of ratios? Ratios establish relationship between a line item of certain statement to the line items of certain other statements. Similarly, you can have a relationship between line item of balance sheet and line item of all the three statements, different line items of all the three statements. And by creating relationship, you create certain ratios out of it. So for example, when you create relationship between net profit and revenue, what we call it? Net profit margin. When we create relationship between net profit and equity capital, what we call it? Return on equity. And when we create net profit and operating cash flow, I don't know what we call it, but this relationship can be created. And it gives a very important insight. So if you ask me, none of these ratios are important for me, only this ratio is important for me. Okay, but that's fine. Everything is important, but still, if I have to choose one of these three, I will choose this one. Hello. But is there a name? Is there a ratio in the books of accounts? No. Okay. Okay. So far is it clear? Now, utility of ratios. Utility of ratio. Why do we calculate ratio? Why do we, or what is the help of ratio? No, when we calculate ratios, like I'll give you a very simple example. What is giving you better insight? 2012, 2013, 2014. Net profit. Hello. Net profit is 1 lakh, 2 lakh, and 3 lakh. Tell me, what is this business? Good business? Hello.
Yes, as the profit is increased.
Growing.
Right. So anybody here who believes that I can't say if it's a good business or not?
I can't say. I mean, at least I can't say that the growth in terms of the growth of the business. Yes,
I can't say about anything, Nikhil. See, so profit does make sense. For example, in order to make a profit of 1 lakh, if I invested 100 crore rupees, hello, to make a profit of
I
1
said
lakh,
it because because at least the business is profitable. I mean,
that is not objective, right?
Right.
If any business is profitable, you not go and invest into it. So if by investing 100 crore rupees, you are earning 1 lakh rupees, what is the return you are getting? What is the return you are getting? Hello?
Negligible.
Negligible. In fact, even if you put this 100 crore rupees in FD, at least you will get 3.5%. Hello?
Yes.
So at least you will get what? 3.5 crore. Yes or no?
Yes, yes.
So is this a good business? Hello?
No.
No, it's not. So ratio, it is which ratio we calculated? Return on equity. Hello? Which ratio we calculated? ROE. Return on equity just now. Net profit by equity capital. What is the equity investment? 1 crore. Sorry, 100 crore, 100 crore, and 100 crore. Okay. In any of the year, is this business making any sense? In any of the year? Tell me.
No.
Hello? No. Right? Because we know just by investing into fixed deposit only, we can make much better return. Yes or no?
Yes.
Right? So ratio makes things more meaningful. Hello? meaningful.
Right.
Second, ratios make things comparable. Now, why did I say these numbers are not good? Why did I say these numbers are not good?
Because of the investment.
No. Because I compare.
You have a
it with
choice
fixed deposit.
alternative.
Oh, no. Yes, I compared it with fixed deposit. Hello.
Yes.
I compared it fixed deposit numbers. I
Okay.
said fixed deposit numbers are 3.5%. That is why these numbers are bad. For example, if tomorrow fixed deposit numbers are minus 3.5%, hello, we are negative. Well, if we'll start living in a negative income interest rate territory, and fixed deposit gives us minus 3.5%. Tell me, would you invest into fixed deposit or would you invest into this business?
Then ROE is good.
Would you invest into this business or would you invest into fixed deposit? Hello.
This business.
This business, right?
Right.
Just give me a second. The call is coming. Okay. So suddenly this business started becoming meaningful. Why? See, the meaning of ratio is nothing in standalone. In standalone, ratio has no utility. Hello. In standalone, ratio has what? Has no utility. Hello. In standalone, ratio has no utility. If these numbers are not there, can I comment anything on the ROE? Can I comment on the business? No. I'm saying these returns are not good because I know I'm comparing it with what? Returns of fixed deposit. Yes or no?
Yes.
Right? Makes sense? Hello, guys. So, utility of ratio is derived because ratio can be comparable. Utility. Just a call. There's someone on the door, guys. I just received the delivery and I'll come back. I'm extremely sorry for this, guys. So I'm really sorry. You know, my wife had ordered something through my phone, and that guy was calling me again and again. So I just gave my phone to my wife, and now she would coordinate. I'm really sorry for this. Yeah. So I was saying that utility of ratio is derived because ratios can be compared. Hello. Utility of ratios is derived because because why? Because ratios can be compared. Guys, Am I alone here or there are people?
Yes, we are here.
Okay.
Yes, sir.
All right, sorry. Cool. So utility of ratio is derived because why? Because ratios can be compared. Now with what you can compare, that is another thing. You can compare now, for example, if this is not there, what can you say? 2013 was a good, better year than 2012. Why? Because the ratio of 2000 return of 2013 is better than 2012. Hello? Yes or no?
Yes.
2014 is a year better than 2013. Why? Because ratio of 2014 is better than 2013. So ratios in case of business, ratios can be compared at two levels. One, ratios can be compared with historical performance of the same company. Hello? Of the same company. Historical performance of the same company. Second, for example, let me make it now. Tell me, how is this company now? Great, right? 50% return. Hello? It's great, right? But if I give you the RO, so this is company A, for example, this is company what? This is company A. Now, if I give you company B's ROE, hello? If I give you direct company B's ROE, company B ROE, okay? This is company A, right? Company A is into automobile, company B is also into automobile, okay? They are competitor to each other. Now, if you look at the competitor's ROE, it is 80%. Hello, how much? Now tell me which is better, company A or company B? Standalone company A was looking good.
B only.
Standalone company A was looking good. If I make the number like this, year on year standalone companies performance wise also company A is doing good only, right? Because year on year its ratios are improving, right? So with its own historical performance, it's good, doing good. Yes or no? Company A is doing good with its own historical performance, right? But if you compare it with company B, who is its competitor, is it doing good? No, right? So ratios can be compared with its own historical performance of the business, or ratio can be compared with the ratio of other company in the same industry, with the ratio of other companies in the same industry. Mark my word, guys, I'm saying same industry. Why would not I compare the ratios of a company belonging to automobile with the ratio of a company belonging to oil and gas? Hello?
No, different line of business and margins will be
So
different.
different kind of margins would be different. The market
Margins would be different, different market space, different business model, features or doing the
Correct.
efforts would be different. What capital you require to start the business would be different. So a lot of things are different, and that is why it's not a right thing to compare these two, because it is like comparing apple with orange, which is not good,
Banana.
right? You should try to compare apple with apple, right? Is it making sense? Hello? And the third ratio can be a ratio of a company can be compared with industry average ratios. Hello? Industry average ratio. That means company A belongs to automobile industry, and come here, rather than writing company B, I say average overall automobile industry average ratio, right? Average overall automobile industry. Right? Is it clear? Tell me.
Yes.
So just read these three lines and think about it. 1 minute, read these 3 lines and think about it. Okay, I will not speak a single word now. For the next 1 minute, only read these 3 lines and think about it. Just try to put it into your brain. 1 minute. Yeah.
Can I ask question before
Yes,
this
go ahead.
1 minute? Yeah.
Okay.
On the second, I mean, the statement which you written here that it should be compared, within the same industry.
Like I mean, if for example, if I am an investor, I am under a dilemma that whether I should invest in IT sector or let's say pharma sector. So how should I decide that? I mean, then these ratios won't be helpful for me. I mean,
so in that case, you can compare the industry ratio of pharma and industry ratio of
IT.
Overall
sector.
industry ratios you can compare if you want to compare.
But let's say if I have to choose two companies, then in such a case,
then see, look at the other factors rather than looking at ratios only. That ratio of one company is better than, because there are so many factors which would affect the overall price increase in the industry. If you compare the ratios of those two companies belonging to different industry, you might not understand the factors of investment very well, and you might lose a good investment opportunity.
Okay. So in that case, you suggest that we should compare the average industry ratios
rather than comparing it with, you look at industry level. See, this investment ratios, Nikhil Kumar, is not decided based on deciding on company of IT and company of pharma and fund. See, a good investor would not compare IT and pharma at all. A good investor would think about that where his expertise lies. Okay, and he would think that yes, my expertise lie in, for example, pharma. So I would go deep into pharma and try to pick out hero in pharma, because in every businesses heroes will be there. Now, for example, if I compare, for example, the gross margin of a company called APL Apollo, okay. If I compare the gross margin of APL Apollo and the gross margin of HUL's gross margin would be somewhere around 70%. APL Apollo's gross margin would be somewhere around. So let's rather than checking, let's write it down. APL Apollo belong to a capital oriented industry. Okay, APL Apollo belongs to a capital oriented industry. Basically, it makes structural pipes, which is a capital good. HUL make consumer good.
FMCG, yeah.
FMCG. It's an FMCG, right? It's FMCG, and it is capital good industry. So it is high capex industry. Which is high capex industry? APL Apollo is high capex industry. HUL is a low capex industry. So where would investment be higher of investors, shareholders? APL Apollo or HUL? APL Apollo. So let's look at the ROE of APL Apollo and let's look at the HUL of ROE of HUL. Okay. Opening, I don't know, but first time when we open any website, it takes a lot of time. I don't know what has happened. Let's first look at Hindustan Unilever, okay? Yeah, what is the ROE? Hindustan Unilever?
29.2%.
29.2% is right. I don't know if it is rightly calculated. Let me export it to Excel. Sometimes it is not rightly calculated. Let's see the numbers exactly.
So instead, we can see on ROCE rather than
no. Let's not get into that debate.
Okay.
This is March 20, right?
Right.
What is the ROE?
82.
And there's no mistake in this, because see, on the top of it can be mistake. Right now in 2021, things, I don't know what, there's something which is going wrong. The numbers are not flowing correctly, because every year if you see, the numbers are in the range of 76, 100, 78, 79, 82, right?
इसका शेयर भी गिर रहा है
लेट्स अपने ऐसा कुछ नहीं होगा, कुछ कोई इंडिविजुअल नंबर्स का कभी-कभी नंबर्स राइटली फ्लो नहीं होते. इफ यू सी रिजर्व्स अचानक से बहुत बढ़ गए. Can you see? ऐसा नहीं होता है, रिजर्व 7000 8000 पे चल रहा है, कभी कभी क्या होता है कोई नंबर फ्लो नहीं होता करेक्टली, और हो सकता है कोई रिजर्व बढ़ने का क्या कारण है, आई डोंट नो। सो ये 21 को इग्नोर कर दो। 20 का कितना आरओई है? 82%।
राइट।
क्या होता है कि व्हेन यू कंपेयर अ लॉट ऑफ कंपनीज यू गेट टू नो कि ये गलत आरओई है। हम जब अपन, मेरी आदत है तो मुझे पता चल जाता है कि ये गड़बड़ है कुछ। अच्छा, नाउ लुक एट एपीएल अपोलो आरओई। APL Apollo can never in its dream achieve. In life, it can never achieve this ROE. It is impossible for APL Apollo to achieve this ROE, okay? It can't achieve because the kind of investment it is required to grow this business is huge. So anyways, so let's look at balance sheet. What is the ROE? Hello? Never ever gone up 25%. Forget about 70, 80 though. कितना है 2020 में? Comparable है 2020 data, right? What is the ROE? 18%. Now in 2020, if seeing the ROE over here, which company would have decided?
HUL.
HUL, okay.
Yeah.
Now let's see in 2020, okay. So price also will see 2020 only. So 2020 mein you are thinking of investing. 2020's investment you saw. So this is 2020 ROE, right? So in 2020, then you decide to invest into the company HUL.
Sir.
Let me complete my.
Okay, sir.
First, let me, because what happens that when you don't complete one thing and you get into another thing, it just creates a lot of confusion. So what was the price in 2020 December? Hello?
2400 props. Yeah.
Let's go a little longer also. Exactly 2020. कहाँ पर है? यहाँ पर है, right? So what is the price in 2020? March में आया होगा data, right? चलो अभी after rally also, because HUL didn't fall that much. तो rally के बाद
कंज्यूमर गुड्स
choose any point. July 2020, ठीक है? July 2020 तक we were out of COVID related downfall. Market has fallen in March and come back to its full swing in July, right? So let's take July's price. July 2020, 17 July 2020, okay? No COVID effect over, okay? 17 July 2020. 17 July 2020. What is the price? 2334. 2334. And what is today's price? 12 December 2021. What is today's price?
So approximately
2332.
same.
2332. Now let's look at, this is HUL by the way. And now let's look at APL Apollo, okay?
बट आपने 2018 का नहीं देखा अभी, देखो
2018 से भी देख लेंगे बॉस, ये इससे बहुत सुपर डुपर रिटर्न दिए है। 2018 से भी देख लेंगे, आपका मन वो भी रख लूंगा मैं। अच्छा कितना रिटर्न है? 2000, ये कितना? 17 जुलाई, ठीक है? 17 जुलाई का प्राइस पकड़ना है आपको। 17 जुलाई का प्राइस कितना है?
180
170, अरे यार
174.
नो 170.49, ठीक है? 17 जुलाई 2020 is 170.49. 70.49. आज का प्राइस कितना है? 986. Now, if you would have invested, seeing HUL का high ROE, if you would have invested into HUL, what is the return you would have made? Today's price divided by yesterday's price.
Almost
absolute return. You would have actually made loss. Hello?
Yes.
-1.
Marginal loss, yes. Yeah.
Alt HP. Right? Same formula you apply over here. What is the return you are making? Hello? What is the return you are making? 477%. Now you want me to cover the 19, which you said July. कहाँ से cover करूँ? 2018 से, right? So let's pick 2018's price. कहाँ है 2018 का price? July 2018 कहाँ है? July 2018, 13 July 2018, 168. कितना है? 168. Right? Now pick 2000 उसका HUL का 2018 price. July 17 July 2018 कहाँ है? 13 July 2018 कितना है? 1742, right? 1742. 1742. ये यही है प्राइस आज का, तो इसमें भी यही प्राइस आज का, तो
राइट।
486%। या क्या है? So if you want to, if you're thinking yeah nahi ek saal mein to kuch bhi ho sakta hai, in 1 year what anything is possible, let's look at longer term, 3-4 years, right? So does that mean I would never invest into HUL? Hello? No.
No, it doesn't mean
I will
so.
invest into HUL.
We'll have,
does that mean I will not invest into APL Apollo because the ROE is lower? No. It's a different ball game altogether. Actually, it's a different ball together game. That there's no point you compare these two numbers. Hello, there's no point you compare these two companies belonging to two different industries. You would not be able to reach to a conclusion on any parameter. I'm telling you, on any financial parameter, HUL will be always better. कोई और ले लेता हो, आपको लग रहा होगा ROE लिया, इसको सब पता होगा, मैं मार्जिन ले लेता हूँ, ठीक है, कोई और ले लेता हूँ, प्रॉफिट एंड लॉस अकाउंट में ऑपरेटिंग प्रॉफिट मार्जिन दिया हुआ है.
Yes, just one question, Sumit.
Huh.
I mean, in this industry, like tubes or this, I mean, the same industry where Apollo is operating, have all the companies made such tremendous growth, or Apollo is the
So that's
exception?
why you need to compare. That's why you pick up your Apollo when you will compare it with Prakash Pipes, and there are few more companies also. So you will compare APL Apollo with Prakash Pipes. Hello, you will compare APL Apollo with Prakash Pipes.
Or Astral, right? If there is another.
That makes more sense.
Yeah.
Right, and then you make sense that should I invest into Prakash Pipes or APL Apollo, because both the companies belong to the same industries where driving factors of the prices are same, driving factors of business are same, marketplace is same, type of customer is same, right? So I was just giving one more perspective so that let's look at operating profit margin, right?
Yes,
that's another ratio. Operating profit margin, same thing, huh? Operating profit margin, OPM. Now you compare it. APL Apollo operating profit margin in 2020 is how much? 6.18. How much? 6.18. Look at HUL. Operating profit margin will be in profit and loss account. What is operating profit margin? 2020, 24%. How much? 24%. Again, which company will you pick? HUL. But what is the return you are going to make? Again, you know what is the return expected. Here you will make 5 times your money. Here you will make no return at all, right? And if you are looking from 3 years, 4 years perspective, then yeah, 33% return, still far lower than this return, right?
So then what is the reason behind it, Sumit?
Yeah, what is reason behind is something for that you need to understand that this is a different ball game altogether. APL Apollo, right? This HUL is a different ball game altogether.
But even it,
I'm telling you, so the value at which this would be presented, the people would be after HUL. Everyone would like to buy HUL, and because of which people go mad, and they do not understand what is the reasonable value for it, and the price is not a function of value. Hello, there is a difference between value and price. Okay, price is not a function of value, but there is a ratio for that also. That is called as price to earning multiple. Hello, what is the ratio?
PE ratio. Yes.
Price to earning multiple. Now, if you see price to earning multiple, the story will get clear, little bit clear for both these two in 2020. Okay, let's look at that also. First of all, what is the learning? Nikhil? Two companies belonging to two different industries should never be compared. Hello? Two companies belonging to same industry should never be compared. It will give you always fractured view. Okay? Then, and to just satisfy your quench of understanding why it is like this, there are many things. I can't tell you everything about it, but few things I can tell you. One thing out of this, at least, I would tell you to, quench your thirst. Okay, so APL Apollo, right? APL Apollo 2020 price to earning multiple we'll look at. Okay, 2020. July 2020, right? May, October, August, July. July 18 is coming, 17 is not coming. Okay, what is the multiple? 25 times.
25.35.
25. Now look at HUL's multiple. Hindustan Unilever. July 2020, right? What is the multiple? 76. In fact, during that time it is 78. 76 ले लेते कोई फर्क नहीं पड़ता. 76. What does that mean? For 1 rupee of earning of APL Apollo, people are crazily given 25 rupees, right? But for 1 rupees of earning of HUL, people are over crazily giving 76 times money. People are crazy about this stock. It's like never have this kind of opportunity. It's like very rare kind of opportunity which is there. That's why people are buying this stock at whatever price which is available. Forget about the valuation sense. No, it is not making any sense at value. In fact, APL Apollo is not making sense at a 25 value also. I invested somewhere at the value of 17 or 16, where the valuation multiple was 17, 16. My purchase price is around 120 something.
So you made a fortune out of it.
So fortune ke liye you need to invest truckload of money, and then again you need to understand.
Yeah.
To make fortune, you need to invest what?
Truckload of
money. So for example, I invested into Tata Elxsi at a price of 700. Right now the price is, in 3 years the price is 6,000.
6,000.
It touched 6,600 also, but ये चलता रहता ऊपर नीचे. Okay. So, but did I make fortune? No, because I have only 200 shares. I have only 200 shares. So what I invested is 200 into this. It will remain 200 only, right? So at max, what total value I have is 12 lakhs. I made 1,40,000. I made what? 12 lakhs. But you go and ask Radhakrishnan Damani, who? Radhakrishnan Damani. He had 1 lakh shares. How many shares?
They are bull.
No, कोई bull नहीं है. You need to go for with truckload of money. कोई bull और bull नहीं है.
वही समझ.
So Nikhil sir.
Yes, yes.
So did he make a fortune? कितना invest किया था? 2 crore. कितना हो गया? Price कितना है? Price is 6. So he invested how much? 7 crore rupees. Okay. But what did he get? 53 crore rupees. This is what we call fortune. If your 1,40,000 become 12 lakh rupees, you didn't make any fortune, right? It is just okay, yeah. Okay. 1 year's expense maybe, or something like that, right? But you ask this guy. So in order to make fortune, you need to go with truckload of money, be it whatever opportunity. Generally, I know there these days 10,000 has become 1 billion also in case of crypto, but those are like not everyone kind of opportunity, right? So yeah.
Sumit sir, Apollo and HUL belong to different industry.
Right. This belongs to capital good. This belongs to FMCG. Yeah. No, I'm just saying they are not comparable.
Yeah.
And I'm proving to Mr. Nikhil that it is not comparable, and he is clear to it now. Yeah. What question you have? Tell me.
No, I just had this question that this is not competitive. Why are we comparing?
Because he wanted to know why can't we compare. So I showed him why can't we compare. Because by comparing these two, you might take a wrong decision. That's I just made it clear to him. Okay. Is it clear?
Yes, sir.
Okay. All right. So now for the next 1 minute, guys, just read these 3 lines. Okay. Just read these 3 lines for the next 1 minute. I will not speak a single word now for next 1 minute.
Hello. Hello. Hello.
Yeah, have you read it?
Yes, sir.
Yes, Sumit.
Awesome. So you need to take care of these three things, right? So Anay and Nikhil, yeah, Chetan, you wanted to ask something. Sorry, I had stopped you in between then because I wanted to first clear this concept to Nikhil. Chetan?
सर
आप कुछ पूछना चाहते थे उस समय? मैंने
हाँ,
आपको
मैं एक्चुअली अभी टिप हो गया सर मुझे।
क्लिक हो गया, ओके।
हाँ।
Okay, that's great.
Yeah, Sumit, you were saying something. Sorry.
Yeah, so I wanted to say, Nikhil, but I know I haven't satisfied you fully with the perspective
No,
that
I
why
think
it happens.
सर
but इसमें कैसा है? या
पूछ सकते हो अभी?
हाँ पूछो, चलो पूछो।
हाँ, मुझे यही समझना है कि हम जब ये सब नंबर्स लेते हैं बैलेंस शीट में, तो ये कैसे पता चलेगा हमेशा कि ये नंबर हमेशा सच ही बोलते हैं?
नहीं, सो उसके लिए कैसा है कि try to verify that number from 2 to 3 different ways. It can happen in few ways. It might not happen in few ways things. But for example, I gave one example, right? That company's profit is really good, right?
Okay.
So looking at the profit, you say, okay, yeah, this is really makes sense. Hello, yeah, this is good. This is great. Yes, yeah. And what happens then when you compare the profit with the cash flow, you realize, oh, company is losing money rather than making money. Hello.
Okay, sir. Yes.
Right. So what happens is that you need to try to get 2 or 3 views of the same number. That okay. So that is why, for example, if profit is increasing too much, look at balance sheet. That is, account receivable is also going too much. Because if profit is growing too much and account receivable is also growing too much, then it is not making a lot of sense. Why? That means you are selling a lot of things on credit. Hello?
Yes.
Right?
Yeah. हाँ.
That means you are selling a lot of things in credit. Will company receive cash?
मैं सिर्फ nominal profit बता रहा हूँ, basically fictitious profit बता रहा हूँ.
हाँ. So we need to think. This is how we can compare things, right? कि profit is increasing, working capital is also increasing, everything is increasing, but is cash is increasing or not? Compare it with cash. So ऐसे बहुत सारी चीजें. So a few things we can do it like this. Few things we need to compare the balance sheet number with what company is promising. So in one of the times I remember that company was promising that in one of the company, now I'm not remember the name of it. I guess it was Pokerna. Yes, Pokerna. I don't know if you guys have heard about it. Not, it's a company, Pokerna. So what they were making as an announcement, I had invested in the 200 and I exited at 450 in this stock. So it's into granite, and rather than granite, it is actually into, there's something called as quartz. In India, we are not too much in use of quartz, but these days we have started using quartz also. But they largely sell their products to US. So quartz is stone. So it's something look like granite, but it is actually not granite. It is engineered stone. Hello, it is engineered stone. Now,
Okay.
granite is a natural stone. Granite comes from the Mother Earth. But this stone, you can, because it is engineered stone, what you can do is, it's in the granite form slab only, but you can give it some design. So if you see, these are design. Otherwise,
I think
granite
it's
will
called
have
a granite.
no, we call, but I know it the name product as quartz only, in which it's a granite kind of product in which you have you have some designing of your own.
Okay, okay.
So in US, it's kind of picking up very great from last 5-7 years as kitchen slab. And now rather than using this as a kitchen top or kitchen slab, people have started using
Yes.
hotels.
हाँ अभी ध्यान में आया सर. Yes.
So they have started
अभी
using in the
ये रोड है
washrooms
इंडिया में
also.
सर.
They have started using in the washrooms also and all. So India में अभी ये pick कर रहा है, but US में this is really like great thing. तो ये कंपनी ने एक अनाउंसमेंट किया था कि we are expanding our capacity and this in the next 3 years. So I kept on looking at their balance sheet. Is capital work in progress increasing? Is fixed assets increasing or not? Right. So if company is pronouncing that yes, we are going to do capex on it, obviously the asset base should increase. Yes or no?
Yes.
So that's how I compare. Okay, actual my asset is increasing or not in the company. So that is how you change, and then you check online. Is a new address getting added for the same company online? So if it is coming with a new factory at a new location, obviously online it should also be verified that yeah, there's new location. So the company has another address also.
Okay.
So something like that you try to do.
मतलब जितना maximum variation apply कर सकते हो उतना variation apply करो.
Yeah. So what we can, whichever way we can check, being a minority investor. So for example, I bought only 1,000 shares of Pokerna, 900 shares of Pokerna. So I can't really have an access to the management. If I would have bought 1 lakh shares of Pokerna, obviously, maybe I would have got access to the management, so I could have asked more questions.
आप board में बैठ जाते sir.
Not board में तो नहीं, लेकिन हाँ, we could have asked questions, right?
Yes.
So as a minority shareholders, we don't have the chance. So जितना अपन verify कर सकते हैं from all other various places, we should try to verify.
Yes.
So I sometimes feel I shouldn't have sold the shares now. This is 645. Okay. I sold it at 450 something. It's fine.
Yes.
Okay. So yeah. So that's how it is. We should try to verify. Again, इसमें कैसा है कि एक आपको मैंने एक लोगों को I have told you guys to watch this video India Investing Conclave पे. Did I show you? Did I show you this?
Last time सिर्फ बता.
Yes, sir, you had showed us.
So in this, if you'll watch the videos now, there are 2 videos on the concept of triangulating. There are 2 videos on the concept of triangulating. One is the
monkey.
Forensics. Yeah, this one. One is this one in which there is a monkey story, correct? So one is forensics in investing. How can you check things which is not making sense or not? Okay, watch this video. And another is basics of forensics and scuttlebutt. These are the 2 videos which are really good to give you a lot of other ways you can triangulate. The word is triangulate. So watch this, you would get some more ideas, a lot of more ideas. I just gave you it in gist, but yeah, I got a lot of ideas. Okay. Okay, yeah, so okay. All right, guys, is it clear whatever we have discussed so far? Hello?
Yes, clear.
Right. So yeah, Nikhil, I was telling you that I couldn't satisfy you much, but as we will progress in this course, you would also realize yourself that what are the factors, and as if you would be reading, there are factors, you would also realize, what could be the factors why one industry and another industry is not comparable. But I just give you.
I got a fair idea now, but yes, I think it will get better.
Okay. All right. So now to understand ratios deeply, guys, there there are few categories of ratios. Now all the ratios are categorized into few broad categories. I'll just let's try to name them. Ratio analysis. One is profitability ratios. What? Profitability ratio. Second is solvency ratios. Third is, anybody has any clue? Return ratios.
Liquidity ratios.
That can come under solvency. Solvency, liquidity is the primary thing for being a company to be solvent. Then valuation ratios. Before valuation ratios comes, turnover ratios, right? So this, and then can be couple of more categories here and there, but largely, now let's see what comes under profitability ratios. Under profitability ratios, you can cover all the profit margins. What are the profit margins you can compare? What are the different types of profit? One is gross profit, another is operating profit, third is net profit, right? So you can have gross profit margin. You can have gross profit margin. Second, you can have operating profit margin. And third is you can have
Net profit.
Net profit margin. Okay. And solvency ratio. What can come under solvency ratios? In order to check the solvency of the company, okay? Hello? Solvency ratio is in order to check the solvency of the company. What can come under solvency ratio? Tell me, anybody?
Debt equity ratio.
Okay. Debt equity ratio. Compare the debt and equity of the company. Then short-term solvency, long-term solvency. If you are checking short-term solvency, then you will compare current assets with current liabilities.
Ratio.
So current ratio. Okay. What else? What else we can?
Quick ratio.
Liquid ratio.
Liquid ratio, again short-term solvency, right? Quick ratio or liquid ratio.
Price to earning ratio.
No, that is not solvency. That is valuation ratio. Price to earning ratio is valuation ratio. Because it tells about the valuation regarding things about the company. Okay. Then
Cash ratio.
Cash ratio. Okay. Can we call interest coverage ratio? Is company is able to pay its interest or not? And different books, guys, will categorize these ratios under different categories. They can even create a different categories also. So do not go much into the categorization. Just try to focus that what is the purpose of. Similarly, there is something called as debt service coverage ratio. What? Debt service coverage ratio. Okay. There's something called as
Debt to asset ratio.
Debt to asset ratio, correct? Debt to asset ratio. When return ratio, we'd have what? Return on equity. Hello?
Yes.
Return on equity. Return on capital employed. Return on asset. Don't worry, we'll go in each of the ratio, guys. Don't worry. Right? Return on investment. Turnover ratios, we can have turnover ratios, we can have inventory turnover ratio.
Fixed asset turnover ratio. Working capital.
Fixed asset turnover ratio.
Working capital turnover.
Debtors turnover ratio. Creditors turnover ratio. We can have working capital, but if you compare all these things, working capital is a byproduct, right? But I can write it down. But I would not cover that because that is not required. Working capital turnover ratio. Now in valuation ratio, we can have price to earning multiple. Another is price to book value multiple. Then enterprise value by EBITDA multiple. Enterprise value by EBITDA multiple, EV by EBITDA, and EV by revenue multiple. And let me categorize all other ratios which are there, which I can categorize as other. But there can be some name to it, other ratios. Like dividend yield.
Dividend yield.
Right. Earning per share.
CAGR.
Earnings per share. CAGR I covered in the day one, right? It's not as a ratio, but yeah, it tells us about the return. I had covered what is the formula for CAGR, right? You guys remember, hello?
Yes.
Yes.
Dividend yield, earnings per share, dividend per share. Dividend payout ratio. Retention ratio. Yeah. Yeah. Largely, I guess we covered the entire globe. They can be here and there. And I can build 10,000 more ratios, guys, honestly. Whatever line items are there, you can compare. As I said, there is no ratio such as in the described books of your accounts. You will not find a ratio like operating cash by net profit, but we can design the ratio like this. Right. Okay. So let's try to cover. So these are basically a lot of ratios which are there, guys, which we can use as a tool. Hello. What we can do is we can use this as a tool to do what? To do what? To analyze the financial statements of the company, right? Right. To analyze the financial statements of the company. Now, each ratio has its own formula and its own utility. Okay. So let me start with profitability ratios. Any company you are analyzing, guys, profitability ratios is must. You should calculate the profitability ratio, yes or no? Any company you analyze. Hello?
Yes.
Yes or no, guys?
Yes.
Because if a company is not making profit, what is the point? Yes or no?
Yes.
Right? So this goes without saying. So what is gross profit margin? Gross profit by
Revenue.
revenue. Gross profit by revenue. What does it tell? That what is product unit level profitability of the company? Huh? Yes or no? That product which got manufactured and sold, how much is spent in manufacturing of that is nothing but cost of goods sold. Yes or no?
Yes.
Right? How much actually went to produce that good is cost of goods sold, and how much the good is sold for is revenue. So revenue minus cost of goods sold is what? Gross profit. Yes or no? Gross profit is what? Revenue minus cost of goods sold. Yeah. So Gross profit by revenue will tell you what? That are you able to make that profit, that product profitably or not? Yes or no?
Can we also call it as operating margin, sir?
Sorry?
Can we also call it as operating margin?
No, operating margin is not only about producing the product, but also about selling the product and managing the entire operation. So production is just one part of operation. Hello?
Yes, sir.
Ramakrishna?
Yeah.
Production is just one part of operation. Operation is comprised of production as well as managing the human resource, as well as the managing the factories, corporate office, and also selling the products. Operation will also include what? Selling the product. You need to take care of the selling. Otherwise, if you keep producing, no selling, what will happen?
No
What will
profit.
happen? No, the company will go bankrupt. Hello?
Yes.
Company will go bankrupt, right? So, gross profit margin. Gross profit is equal to revenue by minus cost of goods sold. And gross profit margin, the formula is? Hello? Gross profit by revenue. Similarly, operating profit margin, what will be the formula? Operating profit by revenue, right? Simple. Operating profit by revenue. Now, what is operating profit? See, normally EBIT is considered as operating profit. Sorry, what is considered as operating profit? EBIT. But I have seen people variably using EBIT or EBITDA. Honestly. Isliye whenever somebody says that operating profit margin is this, I always ask, okay, have you considered operating profit as EBIT or EBIT? Is it getting clear what I'm saying? Normally it is what? It would be what? EBIT. If nothing is mentioned, you can safely assume what is operating profit? What is operating profit? EBIT. Hello? What is operating profit? If nothing is mentioned, you can safely assume EBIT is operating profit. But still, it's a good practice to check if companies are calculating EBITDA, if somebody is calculating operating profit margin by considering EBITDA as operating profit or EBIT as operating profit. Okay? Is it clear? Hello?
Yes.
And third is net profit margin. Net profit margin is nothing but net profit upon revenue. Hello? What is net profit margin? Net profit
by revenue.
Any question? Hello? Any question?
So, Sumit,
yeah.
Just by looking at the net profit margin, will one not be able to tell, how gross profit and operating profit performed? I mean, why do we have to?
No. By looking purely at net profit margin, how can we say what is the operating profit and what is the gross profit margin? Think about it.
I mean, yeah. I mean, we may not. I mean, what I'm trying to ask is, will not net profit give us a better picture in terms of?
Because net profit also includes those profit and those expenses which are non-operating. Hello. Remember?
Okay. Yes.
And I told you yesterday, would you consider investing into business purely based on its operations or purely based on its non-operation activity? Hello?
Operations. Okay. I see.
Operations.
Yeah.
So you are always looking forward to have a very high operating profit margin, but at the same time you also want to know why you look at net profit margin, because you also want to know if there is no non-operating profit, it's okay. Hello? If there is no non-operating income, it's okay. But there should not be extraordinary non-operating expenses into the business. Yes or no?
I see. Yes.
If there is zero non-operating profit, I'm happy with it. Because anyways, I am as an investor is looking forward to invest into the business based on its operations. But I also need to check and ensure that there are not large non-operating expenses also. Because
Got it.
on the one hand, company is not making any non-operating income, but on the other hand, if company is also losing a lot of money in non-operating activities, then as an investor, you need to advise to the company boss, why are you doing a lot of non-operating activities? Hello, right?
I see.
Stop it
Yes.
out, or I will sell your shares, right? So
Makes sense.
so that is why you need to consider both.
Okay.
Any questions so far, guys? Still? Hello? Any questions?
No.
Now, what you guys have to do is, one, everyone. Hello? Everyone.
Yeah.
Next, we will meet when?
So, sir, your voice is low.
Okay, next we will meet next. When will we meet, Siddharth? When we will meet next?
Next.
If we all will be alive and there is no, what you say, tsunami or something, we will meet when?
18.
18.
Right? On 18th, what I want you to come up with is, one, every one of you. Hello? Every one of you. Hello? Who?
Yes.
Sir.
Hey Ria,
Yes,
how
sir.
are you?
I'm good.
Long time, man. Long time. Where were you so far? Huh? You hardly participate, hardly talk. Why?
Now I'll be more participating.
You'll be more participate. Okay. Great. That's a great positive response you made. Cool. So every one of you would go through the annual report of APL Apollo. Okay? Hello? Which company?
APL Apollo.
APL Apollo. Why I'm asking APL Apollo, guys? Because I'm also biased. Try to understand. I have also gone through it, many part of it. So if you'll ask some question, I would be able to respond. Hello.
Yes.
I will be in a better position to respond. So my own. See, I always said that I will be honest with you. So where I'm biased, I'm telling you I'm biased. Okay. So go through APL Apollo.
सर आपको बायस रहना ही पड़ेगा.
And try to understand bias रखे भी कैसा है कि if I'm giving you a company which I'm also comfortable with, so if you have any questions, so I can also respond and we can have a meaningful discussion out of it, right? So everyone will go.
इसमें नया information भी आपको मिल जाए.
नहीं वो तो अभी नया इन्वेस्टमेंट में वैसे भी नहीं करने वाला हूँ, तो अपना डन है, तो वो है नहीं वैसे. या
सर वैसे देखा जाए तो जब भी आप कोई कंपनी में इंटरेस्टेड हो जाते हो और आप उस कंपनी का एनुअल रिपोर्ट पढ़ते हो तो उस कंपनी के तरफ आप बायस्ड हो ही जाओगे मतलब.
Because annual report is a marketing instrument, Anand.
Yeah.
20 years back this was not the thing. What you are saying is correct. 20 years back this was not the thing, but today, Anand, annual report has become what? A marketing piece, and that is why we need to wear which glasses? We need to wear unbiased glasses, otherwise we will be fooled. Because if annual report is my clothes, and if I am going to meet people, obviously I'll not wear torn clothes, right? I would wear best clothes only, right?
Yes.
If annual report is my clothes, I would only tell about the right things, but there are mandatory disclosure, guys. You need to understand, even in those 300 pages, 400 pages, actually in my understanding, annual report should not be more than 20, 30 or 40 pages. All those extra pages are something which we should be scared of. We should not notice a lot of things out of that, because a lot of those pages are promissory. So you would be able to understand this biasness and unbiasedness only when you are going through an annual report. So that is also another thing. So yes, if you are getting biased by reading an annual report, you know you are not reading the right pieces from the annual report. You need to read the right place, and you need to be there on the right places of annual report. Okay.
क्योंकि
So,
सर we only start researching about a company when the shares are going down. अगर share price ऊपर जा रहा है तो there is no problem, right? So when we start researching, the obvious place is to look for is the annual reports. मतलब बाकी public domain में उतना information नहीं रहता सभी companies के बारे में.
पे आने बोला है मुझे मेरे साथ.
नहीं ठीक है आनंद, आपका पर्सपेक्टिव है. देखो इसमें कैसा होता है कि I तो when company is going very high also I read annual report, and when company is not going very high also I read annual report. But no. One should not be biased in reading annual report. What you should do is whatever is written in annual report should be reflected in numbers also, right? You should focus more time on numbers also, and on the top of it, you should try to verify from other pieces, other trends. So for example, if some company is saying that we are number one,
Yeah.
some company is saying that we are number one, try to look at what is the size of the industry from some other source. And the size of the industry is 10,000 crore, and this company is selling goods only of worth 100 crore rupees. How is it number one? It is just 1% of the total industry, right? How can 1% of the total industry be number one? Right? So we need to verify things. So APL Apollo.
In which year, sir?
Sorry.
In which year?
वही मैं बता रहा हूँ. APL Apollo, guys, you will download this balance sheet from here. Say 2021 financial year, okay? 2021 financial years, and you will calculate 3 ratios of APL Apollo: gross profit margin, operating profit margin, and net profit margin in Excel. And you will go through the annual reports of the APL Apollo. Annual reports basically with respect to section called management discussion analysis. Hello, which section? Management discussion analysis. I'm writing it on the chat. Management discussion analysis, and second is consolidated financial statements. Consolidated financial statements will cover what all? Income statement, balance sheet, and cash flow statement. All the 3 statements will be there. And notes to consolidated financial statement. Hello, notes to consolidated financial statements. It will be there below the statements. Okay, I showed you in the Maruti's financial statement, if you remember. Hello, right?
Yes.
सर सेकंड पॉइंट क्या बोला? मैनेजमेंट डिस्कशन एनालिसिस, उसके बाद
consolidated financial statements including income statement, balance sheet, cash flow statement, all.
Okay.
So it is there on the chat. I have written all the 3 statements in chat. And third is notes to consolidated financial statement. Is it clear, everyone? Hello?
Yes, sir.
Every one of you would have to go through it, and then you would also calculate profitability ratio. Calculate profitability ratios of APL Apollo. Hello? Yeah?
Yes.
For how many years? For 2 years. In 1 year's balance sheet, you get financial numbers for 2 years. So you will calculate it for both the years, 2021 and 2020. Okay? Is it clear?
Yes.
Everyone.
Yes.
Sir, I did not get 2021 and 20.
Yeah, you have to calculate the profitability ratios for both the years, 2021 and 2020.
Okay.
And in 1 year's financial statement, you get the numbers for 2 years, last year and this year. So 21's annual report, you will get the financial numbers for 21 as well as 2020.
Okay.
Yeah. All right, guys. So this is what is the task. You have to go through it, and we need to ask questions on Saturday. Hello.
सर एक बार जो आपने वो राइट अप लिखा है ना सर, एक्सेल शीट पे एक बार जाइए ना. I'll just take a screen.
हाँ. ये वाला?
हाँ सर.
इसमें कौन से वाला का लेना है?
This one, the entire sheet I'm just taking. Thank you, sir. Okay.
ठीक है? All right, guys. Then if there's nothing else, we can close off today's session, and we will meet on Saturday. And Nikhil, spend more time on understanding why, not understanding, but try to think on why we should not compare these 2 ratios. And if you get some more ideas on it, do share it with me.
Right, Sumit. I will try to look at some industry related things.
And you haven't sent me the address, right? Have you sent me the address? Hello?
No, I haven't.
I have your contact number, I believe. Let me send an message on your contact number. Then you give me your address, right?
Right. Cool. I'll buy. I don't want to make it a liability, so I'll start with one, and then we'll move to next. Yeah.
So the first you should buy is Rich Dad Poor Dad, Nikhil. not anything else.
I'll start with that one. Yes.
Sir,
Yeah.
प्रॉफिटेबिलिटी रेशियो में सिर्फ ग्रॉस प्रॉफिट मार्जिन रेशियो ही आएगा ना?
नहीं तीनों, ग्रॉस प्रॉफिट, ऑपरेटिंग प्रॉफिट एंड नेट प्रॉफिट मार्जिन, तीनों आ जाएगा.
ओके ओके, ग्रॉस, ऑपरेटिंग एंड नेट प्रॉफिट मार्जिन.
कैलकुलेट ऑल द थ्री.
ओके ओके.
तो सबमिट करना है इसको?
सबमिट नहीं करना है, डिस्कस करना है अपन को. कब?
ओके.
तो कैसा है आनंद, ईमानदारी से जो आगे बढ़ता है ना वो बहुत आगे जाता है. ठीक है.
यस सर.
तो अपने क्या है कि सब प्रोफेशनल है, वी ऑल आर प्रोफेशनल ओवर हियर. आई कैन नॉट प्रेशराइज दैट नहीं यू विल नॉट डू, आई विल नॉट टॉक टू यू, आई विल पनिश यू, नो. And in fact those kind of things even is not possible further because of being digital. तो
सर अभी इतने सालों के बाद भी ये सुनना पड़ेगा तो फिर क्या मतलब?
So if you want to skip it, you can. But what I believe is that if you want to learn it, see, if you want to learn it, you will go through it, right? And if you go through it, obviously there would be questions. Honestly, I can tell you, even the expert of finance and accounts who are sitting in this session would have questions. I'm telling you, honestly. If today I go through it, I would have 10 to 20 questions. Honestly. Because we understood the basic, but every financial statement would have some there, here and there, something here and there, and it's a jugglery. So everybody will have questions. So that's why I would say that I also, when I go through a new company's annual report, na Anand, what we do is we as a group of 3 people who analyze things together for a personal portfolio. Okay. So when we are analyzing one company, or every 3 would decide, okay, this is the company. So we all 3 will go through their statements and the company, and lot many things are there. But when I'm talking about statements, so basically all of 3 would go through statements, and he would have some 5-7 questions. The other boy would have another 3-5-7 questions. I would have 5-7-10 questions, and we try to understand among each other. And both of them are chartered accountants with me. I'm not chartered accountant, so they have larger knowledge than I have, I believe. Right, so I get to learn from that also. Okay, so and that is how you learn through discussion, and it's an ongoing activity.
Sir, right? Is there a specific way to read the annual reports? I mean, is there a?
तो मतलब एक sequence जरूर है कि you should read the income statement, balance sheet, cash flow statement, which are consolidated, and also read the notes to financial statements. You know, but that is the first thing. After that, you should do is you should read the management discussion and analysis. Yes. Management discussion analysis, and after that you should read the audit report also, which the auditors have given.
Okay.
These are the few things which you should always read in annual report. Other things mostly would be promising. In fact, management discussion analysis is also very promising and very over positive, but still.
हाँ सर, आप नेगेटिव ढूंढने जाओ तो नेगेटिव कुछ नहीं मिलता उसमें.
वो नहीं मिलता, but still that's a place you should read, because management discussion analysis पढ़ के ही we get to know what is the future plan of the management.
Okay.
Okay. All right, guys. Then see you. I will connect with you guys on Saturday, and anyways, you can always reach out to me through email. In fact, Amutha has also sent me an email Saturday morning or Friday morning. I forgot when, but yeah, I had connected, right? And Siddhartha I had connected during the week also. So whenever I would get some time, I always have in this my mind that I have emails there to be responded. Right now, first priority will be Priyanka's email. I'm waiting to reply to her email, but she is not coming in the session. I have to check with her that why isn't she coming, and then accordingly I will respond to her email. All right, guys. So during the week, if you want to connect with me, send me an email. Otherwise, we will definitely meet if the world is alive. Yeah. All right, guys. See you.
Thank you, Sumit sir.
Thank you, guys. Thank you.
Thank you, sir. Bye.
Bye, Priya. Bye. Thank you.
Thank you.
Bye, Sumit.
Bye.